nearing probably at day's low points. So there was a slight moment where it did go up a tad bit above that 25,900 levels, but again has slid back to slightly below that 25,900 odd levels, down by about 0.3 odd percent. Let's try to pull up the Bank Nifty as well and see as to what the Bank Nifty is doing in trade today. Slightly in the green. The reversal has not taken place in the Bank Nifty like it has in the Nifty 50, but largely, driven by a lot of PSU names as well. Let's try to pull up the Nifty heat map and see as to what counters are actually buzzing in trade today. A lot of metal names includes your GSW Steel, Tata Steel as well as Hindalco. Both GSW Steel and Tata Steel up 2.6%, Hindalco up 1% almost. There's life insurance names like SBI Life and HDFC Life doing fairly well. L&T, Bharti Airtel as well as Eicher Motors, some counter in the green. But counters overall that are putting pressure includes your Bajaj Twins, that is Bajaj Finserv as well as Bajaj Finance, Tech Mahindra, Coal, Nestle as well as Trent. Trent seeing quite a bit of a pressure. In fact, all Tata counters, seeing a tad bit of pressure there. Titan down by about 1.1 odd percent. There's Trent down 1.8%. And there's Tata Motors, which is slightly in the red right now. But let's try to pull up the overall, advanced decline ratio and see as to what the advanced decline ratio is indicating right now. Start of the show, it was in the favors of the bull. Starting of the trade, in fact, not the show. Then and see as to what the advanced decline ratio is indicating right now. Start of the show, it was in the favors of the bull. Starting of the trade, in fact, not the show. Then we had more declines with regards to where advances stand, but now that gap has even widened more. There is right now advances almost at 1.5:1 ratio or 1.4:1 ratio, more in the favor of the bears. Let's try to pull up the broader markets and see as to what they are doing. The mid-cap 150 down by about 0.17 odd percent at its day's low point, by the way, and the small cap 250 also at its day's low point right now, down by about 0.05 odd percent. Let's try to pull up the BSE 500 and see as to what are the counters that are buzzing in trade. TTK Prestige on the back of its earnings. It seems to be a good quarter for them. Overall net profit growth of around 21 odd percent, followed by something like an IDBI Bank up 7.7%, Spark, HDFC Gascoat, Innocent Bank also seeing gains of about 3.7 odd percent. But something that's not doing very well, Bata on the back of its earnings yet again impacted by GST this quarter. Vodafone Idea down 4.6%. Vodafone Idea, in fact, will be doing a nice bull versus bear segment on this one as well. Shad will bring you all of those details. There's also Supreme Industries, SW Solar, Torrent Power. Aditya Birla Real Estate also came out with its numbers now down by about almost 3.5 odd percent. So all of these counters in focus. Stock specific names, of course, in focus. But Sharad, what are the kind of strategies right now that you are probably noticing in the markets, and what would you what is the kind of strategy in place that you're seeing?
Well, Mahima, the strategy is actually likely to be no strategy because of no kind of a trend actually coming out. But overall, the medium term levels, if you look at it, the technical levels are still decent. But of course, we saw market was in a recovery mode on the expiry day, but the volatility will continue, and over the next 90 odd minutes also we will see a lot of counters buzzing in trade. Important data to look at is the Nifty rollover data. Currently the Nifty rollover is at 63%, and Nifty Bank, if you have a look, that comes in at 69 odd percent. These numbers are going to go up as we go ahead. Now, interesting point is the India VIX that has jumped up. That means there is some business left for the option people also to play. Of course, when the VIX goes past the 15 mark, that's where the real action starts taking place. Key levels support 25,850, resistance 26,050, and Nifty Bank also near that 58,000 mark. It's currently traveling. PSU banks are supporting, but do remember they have a very less constituency when it comes to the Nifty Bank exposure, because almost 60% of that weight just comes to ICICI Bank and HDFC Bank. Support, resistance, these are on your screens. And interestingly, metals and PSU space, there's a buying is happening. Realty, IT, FMCG, there continues to be a drag, but global cues are suggesting consolidation in trade this week. There are three important events which are happening, and they might actually overpower our earnings also. So it's going to be a very stock specific approach, and that's what we are going into. There's Fed meet which is happening, US, China, trade settlement that we focus on, that will also be there, and the big tech earnings, they are also coming, and this is spread throughout the week. So 3-4 major events are there, and either way the side can move, be it Nifty or Nifty Bank. But overall, the important key moving averages, it's still trading above them. So it's not a matter of concern, maybe a matter of positioning. And I think Kush Bora will join. He's a founder at kushbora.com. A very good afternoon, Kush. Markets are showing their definition of volatility, global cues, expiry, as well as we are looking at a lot of other factors moving in. So it's a good time to trade light. And what will be the positions?
Hey, hi Sharad. A very good afternoon to you. You've actually done a lot of heavy lifting for me, so I'm just going to round it up with some levels and probably a quick. No, but you know what? Just to add to everything that you've mentioned, I think this is a healthy consolidation for the markets. Recently, just about last week, you'll recall we were speaking how the Nifty was actually overheated on the RSIs, crossing about 73. That's cooled off to about 68. What we are seeing today is, as again, like you pointed out, more of the expiry effect. I won't be surprised to see Nifty head towards 26,200 and then surpass all-time highs, because largely, if you see, globally, it's the all-time high season. Even if we hit that all-time high, it'll just get a start of the catch-up trade that Nifty will witness. So remain constructive on Nifty. I take this consolidation as a healthy move. Bank Nifty, even more so. Bank Nifty RSI was close to about 76, 77 at one point in time. Even now, despite the profit booking, it's close to those 72 levels. So slightly overheated, but strong momentum. And what is encouraging is the last 2 days. So Bank Nifty RSI was here too. There is a good possibility that the recent high of 58,577 could be retested, and we could move higher, closer to 58,800 levels, like I have been for some time now, about a couple of months or so. Remain more constructive on Bank Nifty than the Nifty. But the near-term structure for both of them fairly encouraging, and long positions are not a bad idea.
Favorite 3 words: buy the dip. Will it apply today also for both?
Yeah, you know what it did? It did actually 2 sessions ago. If you bought the dip on Friday, you'd be making decent money on the Nifty and Bank Nifty, both of them. Yes, very much intact, that strategy. So for the Nifty, immediate supports come in at 25,700. So if a retest of that does indeed occur, then you could buy that dip and hold for higher targets of 25,000 and 25,200. Bank Nifty also very similar. 57,500, that zone is a very strong support zone. It was erstwhile a resistance zone. So yes, if you do get a dip for whatever reason close to those levels, then I think it should act as a good buy the dip kind of an opportunity and a much favorable risk reward ratio.
Okay. All right. And what would your picks be for the day, Kush?
Sure. Hi, Mahima. I'm going with both long positions with all the optimism that I've sounded on Nifty and Bank Nifty. So the first trade is on Apar Industries. The stocks had a good run. There was a small cup and handle formation breakout that came about at about the 9,000 mark. The stock is holding comfortably above that. Last 2 sessions, volumes also very healthy. So from a near-term target, from a near-term perspective, targets of 9,400 and a stop loss at 9,050. The other one is APL Apollo. This one's had a very steady run, through mid-July, end July kind of a time frame. Fair bit of volatility, but on the whole, the medium-term trajectory has been intact. And we've discussed this call a couple of times on the channel as well. So once again, APL Apollo for a target of 1820 and a stop loss around the 1745 mark look good for long positions.
All right, okay. So those are the picks that Kush has on his radar. But moving on to our stock of the day segment, we have car trade today. Let's try to pull that up and see as to what's the kind of rally it has seen and how. Up 18% as we speak now. And this is on the back of strong Q2 numbers. My Puneet, who tracks this very closely, joins us now with more details. Puneet, I think a lot of things have worked. OLX being one of them, plus management affirming that AI is not going to impact them much.
Well, definitely, and I think while they have been emphasizing this a lot, the first question on the conference call was about that. So we'll just get to that in a bit. But first, the numbers, really stellar set of Q2 numbers for the company. Revenue has grown roughly about 25% in this particular quarter, but the EBITDA is up 94%, and that is boosted by all the 3 verticals that the company operates in. Because of that, the operating margins now at over 32% for this quarter, while profits have come in at 59 crores versus 28 crores in the same time last year. So almost 100% jump in the core profitability of the company as well. When you look at the growth verticals, the three verticals that they operate in terms of revenue as well as profit growth, has been stellar again. While OLX is a new venture, it is at a reasonable base, and 17%, the management says, is just the start. In terms of profitability, again, over 30 to almost 200% growth across its key verticals, with OLX leading the charge in terms of its profitability as well. So all three verticals growing very well in this particular quarter. What has now finally actually worked for the company? 4 key points I want to highlight. Attracted almost 85 million average monthly unique visitors in quarter 2, and that has been a number that's been steadily increasing over the last few quarters. When you look at the other aspect, almost in terms of 95% of this traffic is purely organic. That's another key benefit. And in terms of OLX, they mentioned a couple of data points: 500 plus physical locations now for its venture in OLX as well as Upshore, and roughly about 1.8 million vehicles have been auctioned in this particular quarter, and that's reflected in its numbers as well. Finally, in terms of 2 key verticals I want to speak about, OLX is the first one. Now, they have been able to monetize the consumer business, and largely in terms of that, they've said that the customers have been monetized, who actually sell on their particular platform. But management is now expecting the run rate of growth to OLX to actually be higher than the current historical run rate, which is of 17% revenue growth that we just spoke about. So this could well be the minimum level of growth they're anticipating in OLX. They've also highlighted that right now almost all the monetization is actually coming from the seller side. So if you want to sell on the platform, current historical run rate, which is of 17% revenue growth that we just spoke about. So this could well be the minimum level of growth they're anticipating. Monetization is every one seller on the platform, they have 3 buyers. So you will start seeing a monetization of almost 3 times the number of personnel on their platform going forward. Finally, no threat of AI is what the management has affirmed in their conference call. They said that a lot of AI engines actually use a lot of information coming from their own platform, so they do eventually get redirected to their platform. So even if they are using AI to search about the company, they will land up on OLX's platforms like Carwale and Bikewale. So you did see that stellar jump post 12 o'clock when the conference call started, and a lot more in the price, but the valuation is now punchy to say the least, 62 times FY27. So that's the picture on cartrade.com, Carwale, Bikewale as well OLX, all three showing a bumper growth this particular quarter.
All right, Puneet, thank you so much for bringing us those details. In fact, I'll take it up with Kush as well. Kush, 18% already on that counter, right? If you can try to pull up probably a 1-month chart or a 3-month chart and see as to how much the stock is gained. But till we try to pull that up, what is your view with regards to this counter? Do you think after the kind of rally it has seen already today, making an entry right now makes sense? There you go, 3 months up almost 51%. Already seen a good growth. Does the momentum still sustain?
Sometimes we just love when the fundamentals meet the technicals, right? And the views the same. Like Puneet was mentioning, the valuations have skyrocketed. So has the overheating on the daily, the weekly, whatever time frame you pick up. The stock's nearly doubled in the last few months time frame. Now there was a flag and pole formation breakout that was due. The stock was into a long consolidation phase. That breakout has come about. But as you rightly said, after this kind of an up move, does it make sense to buy here? Not at all. In the last 2.5 years, the stock has hit overheated territories, which has once again and has almost always retraced from there, even to the tune of 15-20%, if not deeper. So yes, I would actually wait and watch. 2750 was a good resistance. Stock has hit overheated territories, which has once again and has almost always retraced from there, even to the tune of 15-20%, if not deeper. So yes, I would actually wait and watch. 2750 was a good resistance zone that the stock faced before breaking out. So any dip closer to that level should be taken as a buying opportunity. If you were invested or if you had a trading position in this, now would be a time to take the profit off the table.
Well, interesting profit book suggestion for Carter Tech from Kush. But moving on, in the SME small cap space, we are having Bondada engineering in focus. The stocks, of course, our numbers came out. Numbers were largely, we would say, the numbers were optically on the stronger side, but we'll take in more details as the management has joined in. Bondada Raghavendra Rao, Chairman and Managing Director of Bondada Engineering, joins us. A very good afternoon to you. And sir, the first question is, of course, the revenue jump up is there, a strikingly 154% increase coming in. Even the net profit has jumped 2.5 times. What led to this growth, and is it just a lumpiness of the quarter, or it was a revenue recognition which aided the numbers? If you could just break it down for us.
Yeah, good afternoon. This last quarter, actually, we have very big order booked. That order books needs to be delivered. In spite of very intense rains also, our people have worked hard in sites, especially in Maharashtra. And all these orders, it's as per the revenue plan only. First half year, we have to always, actually, our revenue recognition is 40% in first half year and around 60% in second half year. As per that budget, actually, we have booked our revenues in first half year. That is almost around 1,217 crores against last year H1 of around 480 crores. Last year revenue of around 480 crores. We have budget set as per the delivery plans. As per that, actually, we are delivering.
Mr. Rao, hi.
For around 480 crores. Last year revenue of around 480 crores. We have budget set as per the delivery plans. As per that, actually, we are delivering.
Mr. Rao, hi. Mahima also joining in. If I'm not wrong, the total order inflow that you were expecting this year is around 6,000 crores. Till what extent have you reached, to get to that mark of 6,000 crores?
Yeah, end of this financial year, we are getting anything like 8,500 crores as a closing order book. As on date, our order book stands at around 6,000 crores, and around 7,500 crores tendering is already on. Our strike rate as on date is around 25%. Even last 1 month, actually, we could able to make L1 of around 2,600 crores. Combining all these numbers, actually, we are anything between 8,200 to 8,500 crores as a closing order book by this financial year end.
Mr. Rao, you are speaking about the expansions also, and especially the Hyderabad manufacturing facility that has been launched for your subsidiary Atpol Technologies, and it's roughly 21,500 square foot odd facility. Could you just give in more details of it? What kind of expenses we can, incur for this, and what are the suggested timelines? And after that, I'll be also asking you your question on 2 new subsidiaries as well. But let's start with the Atpol Technologies. What is this Hyderabad's manufacturing facility all about?
Yeah, Atpol Technologies is into manufacturing of BLDC motors, brushless DC motors, which are mainly used for EV, 2-wheeler and 3-wheeler, even 4-wheeler also. And also a lot of other appliances like home appliances, even agriculture appliances, even defense appliances also. This facility we have created, this Atpol is actually used for EV, 2-wheeler and 3-wheeler, even 4-wheeler also. And also a lot of other appliances like home appliances, even agriculture appliances, even defense appliances also. This facility we have created, this Atpol is actually bought out company for us. It's a subsidiary company, bought out company for us. Earlier we used to run in rental facility. Now we have the greenfield facility which is built in Hyderabad as a Bondada industrial.
Right, sure. Mr. Rao, we'll just come back to you. Let's cut across to IOC management speaking to media about their Q2 earnings. Listen in.
For a minute, the calculated margins seem to be a bit lower. So, just the diesel cracks is actually helping offset negative, discounts for all the other products. Is that what we are really seeing? Or is it refinery efficiency also that's playing out in terms of such a robust GRM performance for this quarter?
See, if you talk about the refining performance, the cracks of HSD has been quite good. If I talk about the HSD cracks, it is the cracks is more than, it was around 10 last year, which has been 14 this year. And the MS also, last year it was 4, now it is almost 6. So the cracks of both MS HSD, which are the significant portion of our product, they have a very high margins. Coupled with, we have a very good operational performance also. So in all the parameters, I think there was good margins for the refining sector.
Right. So one last question, again a clarification, sir. I couldn't catch the commentary. How much is the LNG supply agreement with Traffic Europe, and what are the terms of that in terms of pricing?
Yeah, just a minute.
Yeah, so the term is supply of approximately 0.4 MMTPA, 0.4 MMTPA per annum, right? Of LNG from July 2025 onwards through December 29.
July 25 to December 29. Thank you so much, sir. I'll come back if I have more questions.
Yeah, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to...
Well, an interesting commentary coming in from IOCL as well, and of course they spoke about the LPG loss cylinder that has come down in Russian crude, just 18 to 19% range. But coming back to Bondada Engineering, Mr. Rao, we are speaking about the expansion plans, how the manufacturing facility has held up, but the company also has a lot of value unlocking stories. I know there's a lot of unlisted arms which are there, and 2 new arms have come in. Green Bond RE Park, it's a solar project, and there's Bondada Dynamics, which is a defense sector entry. So the entire investing universe, their queries on the defense sector, they are asking a lot of questions on this. What would be the foray? Any fundraise would be there? Will it be in the main company? Will it be in the unlisted space? And also, what would be the suggestive timelines? Expected to be on the higher side. So we want to know about the defense sector, what your growth plans would be.
Yeah, defense, our Bondada Dynamics Private Limited is a very nascent and recent company that we floated as a subsidiary of Bondada Group, Bondada Engineering Limited. And mainly we would like to get into the defense sector where almost where we are there actually. Right now we are also into as energy transition BESS, battery energy storage system. So how come we can get this battery energy storage system into the defense systems, defense marine battery energy storage system? That is one thing which is happening, and another 2-3 technologies we are working on it. Maybe we may take another few months to come out and then declare that actually what exactly our business plan in this defense segment, even including our at poll that BLDC motors also a lot of requirement for defense sector, and then declare that actually what exactly our business plan in this defense segment, even including our at poll that BLDC motors also a lot of requirement for defense sector. We will come back to you maybe next of time what exactly we are doing in the defense sector, but it is going to be very big. We have very big plans in this defense segment, combining our existing capabilities and technologies and credentials. Also, we are looking at inorganic growth in defense segment. As far as investments are concerned, initially we will use our internal accruals only for this defense. If any investments are required, definitely we will come to market for this defense.
All right, understood. You did mention, Mr. Rao, that you would be looking for inorganic opportunities, if at all, in that defense space. Any particular segment in the defense that you would want to foray into? You talked about battery energy storage systems. Would it be in the same lines or would it be in a different segment?
When we have unmanned vessels, one system, communication systems for unmanned vessels, UAVs, that is also one thing that we are examining. And in few other technologies are also we are examining. That's the reason I'm telling. Actually, we will come back to you with very concrete plan. We are come back to you. Some of the technologies which we are working at bit confidential. We'll come back to you on this defense what we are going to do.
Mr. Rao, with regards to where renewable energy stands, you have, grown your order book in a very big way when it comes to your entire renewable energy space. In fact, you've also said that around 1,800 crores in FY26 is going to come from the renewable energy space of the 2,600 odd crores that you're aiming for FY26 in terms of top line. So just want to understand as to how things are going to shape up from here on where renewable energy is concerned, especially when, you come from the renewable energy space of the 2,600 odd crores that you're aiming for FY26 in terms of top line. So just want to understand as to how things are going to shape up from here on where renewable energy is concerned, especially when, you have good targets for battery energy storage system, and everybody right now seems to be going in that particular segment. What's the view like?
Half year revenue numbers itself, actually total renewable energy is occupying almost around 79 to 80% of our total revenues. Rest is coming from other segments. It is going to continue. This momentum is going to continue, and we are going to better the numbers than what we declared. This renewable energy, that's especially the solar EPC works, are progressing very well. We are almost at par with our targets and at par with our budgets, which we are going to deliver. Even with the recent order winning also, it is going to boost our revenues even coming financial year. What I would like to say here is actually renewable energy is going to be a big business for us coming 2 years.
Sure.
Next 2 years.
Thank you very much, Mr. Rao, for giving us the entire details about the earnings and the outlook going ahead for Bondada Engineering. But Kush, looking at the stock is tanking. It's down 4%, and after our interview also the stock is on the lower side as well. Is it actually looking good for an accumulation, or one should be away from this counter right now? Because right now you're seeing much more selling happening, and I think the volumes are also seeing kind of a distribution happening.
Absolutely, Sharad. In fact, if you look at the fall from the high levels of about 750 that the stocks had over the last year or a little more than a year, the
selling happening, and I think the volumes are also seeing kind of a distribution happening.
Absolutely, Sharad. In fact, if you look at the fall from the high levels of about 750 that the stocks had over the last year or a little more than a year, the 38.2% retracement comes in at 495. Multiple times the stock has tested that level, just about 500 also, and retraced from there. So when the stock is not able to cross those resistance marks, I wouldn't suggest buying at the current juncture. At best, what you could do is continue to hold if you have a position, and closer to those 500 levels, you could look at an exit. So for now, Bondada Engineering, sell on rise, close to 500 levels, should probably be better off booking profits, or maybe going a little light on the stock.
Right. Sell on the rise strategy for Bondada Engineering is what Kush is indicating where technicals are concerned. But the other interesting story that we've been tracking is that Zerodha is now going international. Zerodha is going to allow its investors to invest into US stocks, and this comes after Nitin Kamath spoke at one of the events, and they plan to allow investment in US stocks. Of course, this is still in the works right now. Overall, the company has received the necessary regulatory clarity from the GIFT City. So hopefully, in the next quarter is when they're expecting this to roll out. Now, how does overall, to give viewers a perspective, how does this investing in US stocks generally works? Investment generally is made under the liberalized remittance scheme, where the total amount of LRS is capped at around $250,000, and this is a total amount that is capped by the RBI. The investors can start fractional investment in shares, that is, they can invest small amounts in names like Apple, Tesla, Alphabet, etc. Overall, money is transferred to the partner US brokers, and then this account is used to buy shares. This is how generally it works. You can also hold these stocks exactly in your name like a US investor. Now, just to give viewers a perspective as to how US markets have done over a period of time, annualized returns for all of these indexes, S&P 500 has given an annualized return of anywhere between 11 to 12% in the past 10 years, NASDAQ around 19% and Dow Jones around 8 to 9%. This is the annualized returns, of course, in the past 10 odd years, and historical returns for all of these counters. If you take a look at the 5-year returns of Apple, that stands around 147%, Microsoft at 163%, Alphabet at 233%. We also have other names to 9%. This is the annualized returns, of course, in the past 10 odd years, and historical returns for all of these counters. If you take a look at the 5-year returns of Apple, that stands around 147 in this line, whereas Nvidia has given returns of over 1428%. So all of these counters, you can go ahead and invest in once, of course, Zerodha opens it for its investors as well. Now, in terms of how will you be taxed, because this is an interesting one. Once you invest, of course, you'll also be booking profit at some point. So how will that be taxed? Short term, same as how generally your capital gains are taxed. So short term capital gain less than 24 months will be taxed at the slab rate which is applicable to you, and when it comes to the long term gain, which is more than 24 months of holding of any of these counters, 20% with indexation will be allowed. Moving on to the dividend part. Of course, if you're owning a particular stock, the company might pay some dividend to you, so that could be where some TDS will be deducted, but of course that can be claimed under DTAA, which India has with USA. So that's, and this is to avoid double taxation. And lastly, in terms of how this will stack up against the already brokers that are providing these services of investing in US stocks, you have your counters like IND Money, HDFC Securities, ICICI Direct, Motilal Oswal, as well as 5paisa, which already provide these services, and they already have tie-ups with US brokers. So we'll have to see as to which broker Zerodha ties up with and how early does this investment in US stocks on the Zerodha portal start. So this is the overall view of Zerodha going international. But with that, viewers, it's time to slip into a very short break, but we'll be right back on the other side, so do stay tuned. Viewers, it's time to slip into a very short break, but we'll be right back on the other side, so do stay tuned.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
Well, that's very sweet of you. Thank you.
I think that's very, very important.
Now the opportunities are increasing a lot.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive. In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you.
Discerning, distinct. NDTV Profit isn't just business news.
We are like visiting.
Welcome back to India Market Road. You are watching NDTV Profit and we are having an exclusive conversation with a person who doesn't need any introduction. His name is Mark Mobius, co-founder at Mobius Capital Partners. Very good afternoon, Mark. And first of all, I'd like to give a season's greetings also to you from India as well. There has been, talking about the Washington Post allegations. The government of India, apparently they have pressured LIC and that amount has come to roughly $3.9 billion. Yeah, in Adani Group.
So, yeah.
Okay. Mark, are you able to hear us? Mark, I'm going to check again. Are you able to hear us? Okay, so we're gonna have to check that line. What he was saying is he wasn't able to hear you, so that entire question was lost. It's
in transit.
It's in the wind, somewhere between here and Singapore or Hong Kong, one of the two. Yeah. Anyway, but let's talk in the meanwhile, while we're waiting for that to be fixed. Let's talk about the markets, and we're at the low point of the day, if I'm not mistaken, 0.5% lower for the benchmark Nifty 50, and it's been quite chop and churn. Only a small part of the session you've seen green on the screen for the benchmark Nifty 50. Let's pull up the heat map actually for the Nifty 50, right? Because that'll give you an indication. At the start of trade, you saw far more green on the screen than you're seeing right now. And this really is a turn in the tide, so to speak. In fact, let's pull up the broader markets as well and see what those indicators are telling you. Let's pull up the mid-cap index if we can, and the small cap index, down about 0.33% for the mid cap index. Let's put up the small cap index as well, down about 0.1%. I think Mark's back.
Yeah, but overall, if you see, what's happening is there is no direction. We're trying to hit that 26,000 mark, and from there, it's a reversal that's taking place, and that's the story that markets are living with right now. When will we be able to actually cross that 26,000 mark and sustain above those 26,000 levels is anyone's guess right now, but that is going to be crucial from here on. In fact, we have Mark Mobius, co-founder Mobius Capital Partners, back with us. Mark, good afternoon. Hiral on this side. Are you able to hear us well now?
Yes, I can hear you very clearly.
Great. So Sharad initially was giving you season's greetings from India. Happy Diwali and a Happy New Year to you. And we're looking forward to a Merry Christmas soon as well.
Well, thank you very much. We're enjoying Diwali here in Dubai, where I'm speaking to you from.
Oh, great. So with everything said and done, Mark, the key question right now is, what we're talking about is Washington Post's allegations, where government of India has pressurized LIC to invest up to $3.9 billion in Adani Group. And this includes nearly $568 million done in the month of May of 2025 itself. Now, LIC has come ahead and refuted all of these allegations. What would you have to say to this?
Well, I think the whole story of Adani has been overblown. I think they're doing good work. It is true, being a family-oriented organization is...
Say to this.
Well, I think the whole story of Adani has been overblown. I think they're doing good work. It is true, being a family-oriented organization, there's no question there'll be cross-shareholdings, that sort of thing. But generally speaking, I think the company should get the support because they're so important to the infrastructure of India, in addition to other companies, of course. But I think it's fair for LIC to invest in Adani. It will help them as long as they keep an eye on the balance sheet and on the profit and loss statements and the audited statements, then it should be okay.
Right to say that it's another hit job which has actually fallen flat, because a lot of investors which are there in Adani's bond offerings, apart from an LIC, you have marquee names like ICICI Prudential, Nippon Mutual Funds, HDFC, NIF Infra, a lot of them. So would you categorically say this, that it is another hit job which is actually falling flat?
Yes, I think so. And I think, it's important to remember an investment in Adani is really an investment in India. Now, maybe some people would say that's going too far. When you invest in Tata or Reliance, you're also investing in India. But in the case of Adani, it's very important because of the infrastructure work they're doing. So I think it makes sense for them to keep on doing what they're doing. And those companies that are investing in Adani are doing fine.
Mark, we're speaking at a time when, at least right now, you've had a dissipation of selling in the Indian equity markets by foreign institutions. That's what the latest data is pointing to. You've seen index shorts been reduced over the course of a couple of weeks from 94% to now 74%. And that is why you've seen a little bit of a pullback in the benchmark as well in the Nifty 50, and the large counters are seeing a little bit of buying once again. Banks and IT are being preferred. I'm just wondering, and that is why you've seen a little bit of a pullback in the benchmark as well in the Nifty 50, and the large counters are seeing a little bit of buying once again. Banks and IT are being preferred. I'm just wondering what your opinion on India is at this juncture, because there has clearly been an underperformance versus other major markets in the world.
That's true. There has been underperformance. Part of the reason is that China has been doing quite well, and you've seen some very short-lived, because at the end of the day, if you look at the numbers, India with the GDP growth of 6%, which is quite amazing, you see inflation now coming to the lowest levels it's been in a long, long time. So there's a lot of very positive signals. And of course, I believe they're going to come to some accommodation with the Trump administration. They already have seen some cutback in purchases of oil from Russia. So all these signals, I think, mean there'll be a good recovery in the Indian market. So we're betting on India going forward. The problem, of course, is getting access to India, because we're having a lot of trouble with some of our funds to get permission to invest in India, because Deutsche Bank, our local custodian, is having trouble with the paperwork and all the rest that has to go into that. But otherwise, yes, definitely India will be a place that we want to focus on.
Pretty interesting, Mark. India would be the place where the entire action takes place. But global commodity cycles also, we are seeing there is a kind of a technical pullback happening when it comes to gold and silver as well. Are we looking at a bigger upcycle from these current levels as well when it comes to gold and silver? What would be your views on that?
Yeah, we've seen a big pullback in gold, about 10% pullback. I think that
looking at a bigger upcycle from these current levels as well when it comes to gold and silver. What would be your views on that?
Yeah, we've seen a big pullback in our portfolios. We still hold gold, and I think there will be recovery in gold as well, of course, with silver following gold.
Mark, one question I have. Last time I spoke to you, you told me Sensex at 1 lakh in the next 1 year. Do you think it could come in earlier, taking the way markets are right now? You're seeing an upcycle. There is some bit of a pause, but with all the factors which are aligning, do you think the 1 lakh mark could come in earlier?
Yes, it could be, particularly when you see the markets globally moving the way they are. And of course, if you keep an eye on the S&P in the US, it's going from strength to strength. If this continues, and if the political news keeps on gaining ground and being positive, with Trump traveling all over Asia, all these signals will be good for the markets. And yes, it's quite possible that the Sensex could go a lot higher than they are now.
Now, you said that you're looking at India very closely, Mark. So therefore, the question arises, and a lot of our viewers will be paying attention to this as well. Where are you looking to deploy? And if there are individual names that you're studying right now or have invested in, we'd love to hear them.
Well, I can't give you individual names because we're in the process of investing, but I can say that the consumer area is particularly interesting in India because you've got a huge consumer market. Per capita incomes are going up. With GDP growth, the way you're looking at it, it's going to be very, very interesting to be in the consumer space. So that would be one area. The other area, which I mentioned before, is consumer hardware. in addition to consumables, hardware will be good, and electronics hardware. As you know, I think the recent numbers indicate that Apple's exports from India have gone through the roof, and now these electronic exports are greater than many other items in the export list. So that is going to be a big, big area of growth. So we're seeking companies that are going to participate in that kind of growth.
Okay, so consumption is going to be a space that Mark is betting big on. Thank you so much for speaking to us at NDTV Profit. It's always a pleasure to get you on the show. And an interesting comment where the 1 lakh mark on the Sensex, which was expected in the next 1 year, could come in earlier as well, the way markets are panning out so far. But thank you, Mark, for speaking to us. Let's also get in G. Chokalingam from Economics Research. We already have Kush Bora, who is with us. Mr. Chokalingam, good afternoon and welcome to the show. My question coming to you is that it is a pretty choppy trading day and there is no direction in the markets right now. We tested levels of 26,000 in fact, in yesterday's session, as well as another day, couple of days ago. How are you expecting markets to move from here on, number one? And two, if you're going to advise investors to look at markets from an investment perspective at this juncture, which would that top bet be?
Yeah. First of all, on the overall market, I firmly believe that market would recover. Yes, it has underperformed, but next 2 months till end of this calendar year, I see Sensex and Nifty giving another 3 to 5% upside because of growth story. I mean, I don't want to repeat again. Not only the growth story, even the low inflation and the monsoon has done well, and water storage in the reservoirs are good, and reversal of interest rate cycle would continue. So all that would augur well for Sensex and Nifty. But however, mid and small caps segments would struggle in the short term because a lot of liquidity got drained away through IPOs, promoter sellings, and then you also have expiry of lock-in period for a lot of investors who have taken pre-IPO shares. Liquidity got drained away through IPOs, promoter sellings, and then you also have expiry of lock-in period for a lot of investors who have taken pre-IPO shares. So therefore, next 2 months is going to be very tough for retail investors. It would be very difficult to make money in the small and mid cap. But overall, Sensex can give a 3 to 5% return in 2 months itself. That would be supported by DII buying and also the FPI who started buying in a small way. They are likely to continue. And investment, yes, one can look at banking theme. That is what helping the market right now. A lot of tailwinds are there. One is double-digit credit growth, and then though the net NPA inched up for many, it is still close to 10-year record low, and in reversal of interest rate cycle also would benefit. So therefore, my topmost recommendation would be from the banking sector, particularly the PSU banks.
And we had an interesting story this morning as well. I'm sure, Mr. Chokalingam, you managed to catch it. The possibility that the government is considering a 49% FDI. And this is something that bolstered a lot of these PSU banks. In fact, let's pull up the constituents of the PSU banking index just to give you a sense. I'm curious about whether they held on to those gains, and quite a few of those smaller counters must have given up a little bit, but they're still outperforming the rest of the sectors at this point. Indian Bank up about 2.8%, Bank of Maharashtra also gaining, Punjab and Sindh Bank. So you see some of the smaller banks that are up and about and outperforming something like a State Bank of India. In fact, we'll talk about that in more detail, but before we do, let's get you all of the chatter from the dealing rooms, and Soumit Sarkar joining in as he normally does to bring you what he's hearing on the street. Soumit, good afternoon, and what are you picking up?
Good afternoon. Quite a volatile session in trade on the expiry days, what we are seeing. Sell on rise seems to be the strategy that we are seeing currently on the Nifty.
Soumit, good afternoon, and what are you picking up?
Good afternoon. Quite a volatile session in trade on the expiry days, what we are seeing. Sell on rise seems to be the strategy that we are seeing currently on the Nifty index that has been followed throughout the day. In fact, from the lowest point, we did manage to recover, but again, Nifty has failed to hold on to that gains, and currently we are trading around the day's lowest point. Stock-specific action, firstly, it's on Coal India. There are sell flows on the large HNI desk is what dealers are indicating. And this is largely on the back of expectations that the volume number for the month of October could be weak yet again. They're expecting a degrowth of around 5 to 7% that could come in for Coal India, and that's the reason we are seeing this kind of a selling pressure. The second stock on the list is AB Capital. There was a big block deal that happened in the pre-open of trade. What dealers have indicated is that demand was quite strong for this block, and they're also expecting potential MSCI inclusion going forward and the Q2 numbers to be on the stronger side. And this is one of the reasons why the stock is still managed to hold on to gains despite the weakness that we are seeing across the board in trade today. Multiple stocks that remain in focus on the back of second quarter numbers: Patanjali, CDSL, DLF and Lodha. A couple of them on the real estate names, and other two is CDSL and Patanjali. All these 3 or 4 stocks, there are buy flows is what dealers are indicating, and this is on the back of expectation that the second quarter numbers could be better than what the street is anticipating. And lastly, when it comes to Glenmark Pharma, positional buy calls have been taken by multiple HNIs. That's what dealers are expecting. They're expecting some positive corporate development to happen soon in Glenmark Pharma, and that's the reason this positional buy call has come in from on the HNI desk on Glenmark Pharma.
Interesting list, Soumit. Thanks so much for that, and quite a few stocks for you to keep on your radar. Remember to track all of these developments over the course of the next few days. We will of course tell you when there is a khabar confirmed. Kush Bora also with us this afternoon. Kush, good afternoon to you, and I'm just wondering what you think of the move right now. You're seeing declines of about 0.5% for the benchmark Nifty 50. Once again, that 26,000 mark proving elusive. And specific question on PSU banks. If you were to right now, you're seeing declines of about 0.5% for the benchmark Nifty 50. Once again, that 26,000 mark proving elusive. And specific question on PSU banks. If you were to buy one of them or a couple of them, which would they be and why?
Hey, hi Alex, a very good afternoon to you. No, my view hasn't really changed from the start of the show, which is, this is more of expiry effect, the cooling off is healthy. I would actually look to buy Nifty and Bank Nifty as well. So both of them pretty much, on the radar for buying. Support zones for for Nifty immediately 25,700. So as long as that is intact, I think this buy on dip strategy would very well work. Bank Nifty, despite the kind of, mild correction or profit booking, you could call it, that you're seeing, has actually given you a higher high, higher low formation. So yes, the trend, the medium-term trend very much seems intact, and this is just the excess cooling off. So I take that as a healthy sign. Now, I'm glad you asked about the PSU banks and the quick rephrase of not one but maybe a couple of them, because right now you're spoiled for choice there. My top pick in this space is Indian Bank, has been for some time and continues to perform rather well. No reason to let go of that position if you have. If you're looking for an entry, I would suggest a mild dip closer to the 835, 830 zone from a trading perspective would make more sense, because it's close to the overheated territory. But even now, the volumes are on the rise. Now, the second one, which is on the verge of a breakout, and once that comes about, it could see a very sharp up move, is Canara Bank. It spent the good part of this entire month testing that 130 mark, and has not been able to successfully close above that. But this could well be some resistances playing out, some weaker hands, probably booking profits. Once the expiry hangover is over, I suspect that this could cross at 130 mark and move higher to 136, perhaps even 142 levels. So Canara Bank and Indian Bank, these are my two top picks in this space.
Two proper picks coming in, Canara Bank and Indian Bank. Ownership troubles are brewing at ESAF Small Finance Bank. The RBI has rejected its proposal to reduce promoter shareholding through a stake transfer to Diya Vikas Capital. What does this mean for bank's compliance roadmap and promoter structure? Let's go across Vishwanath Nair, who is tracking this story for more details.
Right, so as the developments have been announced by ESAF Small Finance Bank, essentially its promoter entity, ESAF Financial Holdings, was supposed to extinguish some of the shareholdings that its identified shareholders had, and issue the bank's shares to these investors. And primary of them is the Diya Vikas Capital, which is the subsidiary of an international impact investor. Essentially, that investor, Diya Vikas Capital, would have ended up with about 12% 12%, a little over 12% stake in ESAF Small Finance Bank as part of this entire transaction. Now, this was, of course, proposed back in December of 2024. After that, you had to get a Reserve Bank of India approval because right now a new investor would have entered the bank and they would have had shareholding more than 5%. So RBI approval was essential. And now we're hearing that the RBI has actually rejected this entire proposal. The promoters will have to figure out a way to not only bring down their shareholding in ESAF Small Finance Bank, which is a requirement. Currently, they hold a little less than 53% stake in ESAF SFB. They're required to bring it down to 26% by 2032. So that timeline for reduction of the promoter stake has gotten extended unduly. They will also have to figure out a way to actually compensate Diya Vikas Capital because there is a shareholder agreement under which Diya Vikas Capital was holding shares in ESAF Financial Holdings, the promoter entity. And it was part of the agreement that they would have a right to exit that shareholding. Now, if the RBI is not going to allow this proposal, then that exit also comes into play, and that is also an issue for ESAF Financial Holdings because, of course, the a right to exit that shareholding. Now, if the RBI is not going to allow this proposal, then that exit also comes into play, and that is also an issue for ESAF Financial Holdings because, of course, Diya Vikas Capital is a considerably large shareholder in the company. We'll have to see what exactly they come up with, what is the solution that they come up with. Time is a little bit short. It's already to complete this entire transaction.
Okay, thanks Vishy for that. In fact, let me take this question with Mr. Chokalingam. Mr. Chokalingam, we were just discussing about this, that the RBI seems to be in a rejection mode right now. You have ESAF Small Finance Bank where rejection has happened over 5% stake acquisition by Diya Vikas. Then you have Jana Small Finance Bank's application for Universal Bank that has been rejected as well. What do you make of this entire scenario and what would you advise investors to do? First up, your quick view.
Yeah, on ESAP, I looked at the numbers. Net NPA is 3.8%, which is really very, very high. You know, most PSU banks were able to bring it down even below 0.5%, which is quite high. And of course, it is in price. The price also corrected a lot, and it is a slightly discount to book value. So therefore, I would say that one can hold. There's not much downside risk, but whether one can make a significant return in the short to medium term, I doubt. And they have made an enormous loss in FY25. So they are in need of tremendous capital also to shore up the net worth after this loss. So if the company succeeds in getting new capital, then one can buy. Otherwise, I would give just a hold on the stock.
Okay. So that's the comprehensive view on ESAF Small Finance Bank. Keep it on your radar. Quite a few developments on this one. But a stock that has been buzzing yesterday and today is RR Kabel. And we've been trying to find out why. Certainly volumes are significantly higher than they are normally. At this point, the volumes are about 5 times the 30-day average. The question to you, Kush, then, on the charts, yesterday's 6.5% move up. We've highlighted it at the open and we were wondering why this was moving up, and you said that it was looking positive. What would you do right now, though?
Absolutely, Alex. In fact, I did put it on my radar as well after that discussion that we had in the morning show yesterday. And, the same view, which is if 1300 was crossed and if the closing does come above that level, then, you could see the stock zoom higher. It's already zoomed yesterday and, gaining ground today as well. I think from a near-term perspective, this trade is done because, not because, it's already overshot, because there are supply pressures at the 1400 mark and you could see some sort of profit booking come in on the account of the run-up that it's had in the last 2 sessions, and also because technically 1400, 1410, that zone remains a supply zone. So yes, if you did have a position from lower levels.
Kush, just to interrupt you, apologies, but you've got TVS Motor, and let's pull up the charts because the reaction is pretty sharp on the downside. Can we pull up the charts and we'll talk about the numbers in just a bit? But there's a significant downtick, down about 2%.
Is this profit booking or not is what we need to see,
because PAT number is up 37%.
Yeah, 37%. If you can just pull up even the revenue, 30% growth in terms of the revenue, if you have to look at, versus estimates, I think that is going to be key. If you talk about the estimates as well, we were expecting the profit number to be at around 951 odd crores. That has come in at around 906 crores. So a marginal miss coming in on the profit front. Revenue was expected at around 11,729 crores. Let's see, 11,900 odd crores is what you're seeing. So that number is in fact above what the street was estimating as well. Margins were expected at around 12.8% on a consensus basis. If we could just pull up the margin number as well and see what that number is looking like. And the EBITDA of 1,500 crore was the number that the street was estimating. So that's with regards to EBITDA. But it seems, I think this is more of a profit booking that is coming in on the TVS Motors. Let's just pull up a 1 month or a 3 month chart of a TVS Motors, and that will tell you the entire story of what's happening. There you go. In the last 1 month, 5 to 6% is the kind of up move that has come in on this counter. Puneet, the first look in terms of numbers, because it seems revenue is above what the street was estimating, a marginal miss coming in terms of profitability. And from a margin and EBITDA perspective, what are the numbers telling you? Because a sharp drop in the stock price right now.
Well, definitely. I think it's we were going with a number of about 27% in terms of revenue growth. It's coming at 29%, and largely that seems to be because of higher average selling prices of the models that TVS operates in. So apart from Apache, which is one of its key models, we also have seen that it also has the scooter portfolio, the likes of Jupiter, the likes of Ntox, amongst others. And because of the higher premiumization that we've seen, even in the scooter space, we are starting to see that reflect in TVS's numbers. The other key change that has happened now compared to the same time last year is also the EV penetration increasing. Now, TVS has almost 24% market share for the company in the EV space in India, and a lot is now above the 1 lakh rupee portfolio. So even within the iQube, that is above 1 lakh rupees. So that is one. In terms of EBITDA, we were going with a 39% growth in the EBITDA number, coming in at 1,499. It's coming bang in line and actually much higher also, because we saw that for TVS in terms of revenue growth. And margins, we were going with a number of 12.8%. It's coming just a tad around 12.7 to 12.8%. So we'll wait for the company's commentary, if any, in terms of copper prices, in terms of steel prices, if there was any impact. But largely in terms of the numbers, all the four numbers in terms of including the profit margin seem to be in line with the estimates that we were working with. We will be waiting for the comment if there was any impact. But largely in terms of the numbers, all the four numbers in terms of including the profit margin seem to be in line with the estimates that we were working with. And especially on the Norton launch, which is scheduled on November 4th. They acquired this in 2020 in a slump sale basis. That will be a key one. But largely there are some selling essentially because of the miss that you mentioned on the profits. We are working with a number of about 951 crores. It's coming at 906 crores. So a little bit of miss in that aspect. So we'll wait for those clarifications to come in. But conference call is scheduled today at 5 p.m. So a lot more will be covered post that in terms of the commentary, amongst others.
I would actually ask you to check the other income line item, because there is a negative item of about 21 crore rupees compared with a 30 crore rupee uptick in the comparable quarter a year ago. Maybe we get some clarity on why that has come about. Not that it will bridge the gap of what was anticipated, but it to a certain extent would mitigate some of that lower than expected kind of number. Mr. Chokalingam, if you've heard the numbers and you had expectations on TVS Motor, how have they stacked up, and would you go ahead and buy if you have the dips that you're seeing right now, and if you see further dips, would you add or would you buy?
I would rather suggest sell. Definitely there is a smart selling of the stock. Results are fabulous. 29% top line, and the PBT, profit before tax, is up 36%. It's a fabulous, but it's only a question of valuation. It is now trading at around 70p on a trailing basis, and the stock has beaten the Sensex and Nifty by a phenomenal margin in the last 1 year. So it is just a smart selling which is happening. I think it might continue because the valuation is stretched. And let us not forget the fact that two-wheeler industry, beyond 2-3 years is always a highly cyclical. So one has to be a little cautious while paying this kind of valuation. But otherwise, yes, it's a great management, great company, great results. It's only a question of not having absolute comfort at the current price in terms of valuation.
Selling is what is happening, Mr. Chokalingam. Absolutely. In fact, the 31 crores is the fair valuation loss on investments held by the company. As against a fair valuation of around 23 odd crores, which was in the second quarter of the previous year as well. And in terms of EV, the company's EV sales have grown by around 7%. And this is the highest ever quarterly sales that they've seen in the EV segment as well, is what they've said. And magnet availability continues to pose challenges in the short to medium term. That's the commentary. And magnet is the rare earth magnet that is under question over here, is what the management has indicated so far. So I think there is some bit of the commentary also that we will have to decode as to why the street is reacting negatively, apart from the smart selling that's happening. But very quickly, Kush, would you be a buyer at current levels of a TVS on the charts?
I'd hold up 3450, 3500 is the zone where there is support that comes in, and around that level you could perhaps consider let the dust settle right now. 3450 is the zone to perhaps effectively.
That's the view coming in. Thank you, Kush, so much for joining us on the show and sharing your views. Mr. Chokalingam, stay with us. We'll quickly slip into a short break. On the other side, we'll get you the top buy today and sell tomorrow calls as well.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the news.
Welcome back to India Market Close. You are watching NDTV Profit, and right now we are joined by Ajit Mishra as well. But Ajit, please hold on. We have a very special segment of Bulls and Bears, and that stock which we'll be discussing is Vodafone Idea. The important question right from the morning and even in the afternoon is, kya ise beche ya kharde? So I'm going to give you all the reasons, Bulls and Bears both. First of all, the stock has been really going up in the last 1 odd month, and of course government is mulling the issue of the reassessment of AGR dues. Now this amount stands at almost 80,000 odd crore rupees. That's an important bull case scenario since Bulls and Bears going up in the last 1 odd month, and of course government is mulling the issue of the reassessment of AGR dues. Now this amount stands at almost 80,000 odd crore rupees. That's an important bull case scenario when it's coming in, but it's not clear yet. Only a specific commentary has come from the Supreme Court. Now let's look at another bull case scenario. The chances of survival becomes higher. Remember, the word is survival. It is not, you could say, thrive. So that is something which to watch out for, and also this will have a domino effect in the industry as well. Bear case, the cash flows are still negative. So of course the company itself, despite coming out with its quarterly numbers, the actual number to look at, the cash flows for a telecom business, that is also coming in the negative side. People speak about the tariff hike that's expected to happen again ahead of Jio's listing. That's what dealers and the street is expecting. Already they have taken 3 to 4 odd tariff hikes as well. But despite that, no revenue growth has come from these hikes. Also, there has been a loss of subscribers as well, and this has continued over the last 3 to 4 odd years. AGR relief, this could trigger a series of events. This could be a potentially benefit for Indus Stars as well, as the debt reduction theme comes in, and also the telecom ancillary space, they also might buzz if this goes positive. That means government wants at least 3 large players in the telecom segment. Bear case scenario, they may see even more profit booking, because from August lows itself, the stock is up more than 50% and today that's the example which we are seeing. The stock is down more than 3 to 4% in the day's trade. But even in the brokerages, there is a lot of push and pull. Foreign brokerage City, they have maintained a buy rating. On the higher side, target price is set at 10 rupees. Almost we are near to that levels. And the bear case, MK has retained its sell rating and given a target of 6 rupees. So there is a push and pull happening across the segment, and we can easily see Vodafone Idea is retail's one of the most talked about stock. Alex, lot of retail interest in Vodafone Idea.
Absolutely, but it's very interesting, Sharad, that even the brokerage that has a buy rating on the stock has, in brackets, high risk in its recommendations. So bear in mind that it's high risk, high reward. The stock is down 5% in trade today. Just a couple of rupees can mean a lot of decline or gain in your portfolio. Ajit Mishra with us. Ajit, just over the last 5 minutes, you've seen a pretty big bounce from the low point of the day for the benchmark Nifty 50. And I was specifically looking at a couple of counters, heavyweights, Reliance Industries and HDFC Bank. If we can pull up those two intraday charts, you will see that there is a similar move in both of them towards the end. So a quick view on that while we take a look at the latest developments at the bottom of the screen, where we have comments coming in from Ashwini Vaishnav about the cabinet approval that has come through. The 8th Pay Commission is set to make recommendations within 18 months on the basis of 50 lakh central government employees which will be covered by this 8th Pay Commission. Cabinet has approved the cabinet approval that has come through. The 8th Pay Commission is set to make a nutrient-based fertilizer subsidy for Rabi crops. Can we pull up the fertilizer stocks then if we can? Something like a Paradeep Phosphates is something to look at. Deepak Fertilizers up about 4% or thereabouts. Paradeep Phosphates is down about 0.4%. Chambal Fertilizers, okay, up about 0.1%. So there's a significant development there. But let's delve a little deeper into that in just a bit. Ajit, before that, comments on the benchmark and the recovery that you've seen now down about 0.1% only, up from 0.5% lower.
Yeah, good afternoon, Alex. Yes, we are seeing that markets have rebounded on the monthly expiry day. We are ending the session almost on the flat note. No doubt this was a roller coaster ride throughout the session, but this move clearly indicates, Alex, that we are just seeing consolidation after this strong move, roughly around 1400 points from the recent lows, and just a breather, before we make a new record highs. So overall, the tone looks positive to us, and since you have highlighted stock like Reliance, SDFC, other banking majors. So barring, I guess, FMCG, majority of the sectors are participating on the rotational basis. So this indicates that this positive tone is here to stay. And in case if we see further consolidation, but index managed to hold 25,600 mark, it's a buy on dip market.
Okay, buy on dip market, but specifically what would you be buying at this point, Ajit? Any names that you would have to recommend right now?
Certainly. So the first name that we have on the list is Bharti Airtel. Since the stock has recently made a new record highs post the consolidation range breakout, and we are seeing steady traction, means every now and then we see a pause or for a day or two, but it's maintaining the positive tone, and we expect this overall momentum to further carry. And 2230 is what we are eyeing as an immediate target. So with stop at 2020, one can go long in Bharti Airtel. At the same time, since we are seeing consolidation in the markets, the prudent strategy is to maintain few shorts also. So Trent is one stock which looks weak to us. It's been almost a year now, and still there is no sign of recovery. In fact, we have a fresh breakdown in today's session. So we anticipate 45-40 levels to be tested soon. So with stop at 4,800, one can go short in Trent also.
That's pretty interesting. Short call coming in for Trent. Telecom segment, we discussed Vodafone Idea earlier, and of course, Bharti Airtel, that becomes a pick for Ajit as well. Choka sir, the question remains is for Indus Stars, key beneficiary you could say for Vodafone Idea is also positive news flow if that comes in. how are you looking at Vodafone Idea, or is there any other telecom ancillary play also which you are looking like, and is there any risk reward ratio favorable there?
Risky, defensive investors can continue to consider Bharti Airtel rather. As far as Vodafone is concerned, I have a clear, firm view on the stock. Its total liability is roughly about 2 lakh crore. The revenue is around 45,000 crore. So we all know the kind of debt it has and the kind of net loss it is making. So fundamentally, it's not a buy, it's a sell. But then there is a possibility that I may go wrong, because there are three parties involved in this company's successful survival and growth. One is a government as a lender. I mean, the company owes a lot of money to government, and also government as a shareholder. And third, the private lenders and private shareholders. So these are the three parties. If they make any compromise in terms of their lending or in writing of their shareholding, then Vodafone can have a fantastic future. But as an analyst, it is very difficult to forecast that. So therefore, it is suitable for highly risk-taking retail investors, who can take even 30, 40, 50% risk and stay invested. The only comforting factor is that, this kind of business, the society needs to have multiple players. So therefore, there is a possibility of, government helping this company to maximum possible extent and turning it around in the long term. However, it is suitable only for highly risk-taking investors.
Well put, and a good summation of the view on Vodafone Idea. Let's pull up the benchmark. We're currently trading now very close to the flat line, or yesterday's close. We've recovered quite a bit of ground. We were down at the low point about 0.5%, or a little more than that, in fact close to 0.6%. How is this roller coaster ride going to end, and what is the next series looking like? Because we are at the end of the October series. We've got Vansh joining in to tell you about the latest metrics that he is tracking. Vansh, what are the key details here?
Well, thank you for that, Alex. So October series ended up on a strong note. Although we have seen some cool off in Nifty in today's trade session, but we are almost up by 5% in Nifty in terms of this expiry. Also, if we look at the October expiry, we have seen a broad-based rally across major indices, and in fact, the banks and financials have continued to outperform. We have seen strong open interest build up in the Nifty banks and financials as well. If we talk about the FNO leaderboard, we have seen Federal Bank, Federal Bank, Persistent, and AU Small Finance Bank topping the charts as well. Also, if we look at the performance of indexes in the October expiry, what we have seen, the Nifty bank has continued to outperform with 6% run up, with the increase in the open interest suggesting long positions that were being built up for Nifty bank, and Nifty 50 giving a 5% run up with the open positions about 15% as well. Now moving on to the stocks. Now if we look at the top FNO gainers in the October expiry, we saw Federal Banks, Persistent, and AU Small Finance Bank topping the charts with increase in the open interest suggesting long positions that were being built up for across the counters in the October expiry. Now moving on to the open FNO losers in the October expiry, we saw Vedanta, Tata Steel, and MCX as well the top gainers for FNO expiry. If you look at the FNO losers, we saw Trent, Glenmark Pharma, Dixon, Ultratech, Godrej Consumer, and Dalmia Bharat, some of the losers in the FNO expiry as well. Now if you look at the stocks that closed with the highest open interest for October expiry, we saw IEX, IOC, Cipla, BPCL, and Oracles with strong open interest being built up across the counters, suggesting some long positions that were being built up in these counters as well. Now, lastly, if you look at the rollover data of Nifty and Bank Nifty, we saw rollover about 63% on the Nifty front and 69% on the Bank Nifty front. Now, this is on the higher side of the range that we are looking at. Also, if you look at the stocks with the highest rollovers, we see AB Capital, Kolpal. For Nifty, we saw rollover about 63% on the Nifty front and 69% on the Bank Nifty front. Now, this is on the higher side of the range that we are looking at. Also, if you look at the stocks with the highest rollovers, we see AB Capital, Kolpal, Fortis Healthcare, and Coforge.
How do we end is the question, right? And we've seen quite the turbulence towards the end. Ajit, the benchmark now up over 5%. We're likely to end this series and October, in fact, as the second best month. And I know that I've asked you the near-term trends, but then where would you peg the end of the year forecast for the Nifty 50 based on what you're seeing right now? Let's assume that there are no major fireworks from overseas and ceteris paribus, as they say in Latin, all things remaining equal, where would you place the target for Nifty 50 at the end of the year?
So Alex, I won't be surprised if Nifty tests, let's say 26,500 or somewhere closer to 27,000 zone also, because it's been almost like, a year-long consolidation that market have finally ended is what I believe and what the indications are. Because earlier we used to see that, the top two key sectors, banking and IT, they were completely on the back foot, especially the private banking majors and the IT heavyweights. Now with the rotational buying continuing across the board and the two key sectors are participating also in this move. The only challenge that I see is the underperformance of the broader market, which may result in a bit of a consolidation every now and then, and maybe a breather closer to around 26,200, 300 mark first. So, but yes, overall tone looks positive, and 26,500 something which seems likely, achievable before the December month, expiry.
Overall markets, but let's quickly address a few of the volume buzzers in trade. TTK Prestige.
Likely, achievable before the December month, expiry.
Overall markets, but let's quickly address a few of the volume buzzers in trade. TTK Prestige. Volumes are strong, results have been very strong, and the stock saw a good reaction today. Kirloskar Oil also, volumes are up nearly 23. Newgen Technologies, again, volumes are strong on the back of earnings. JK Tyres, a similar trend, strong volumes. Bata again, weak numbers, strong volumes. So that's the trend that we're picking up. All of these do have a fundamental reason in today's session as well. Very quickly, Mr. Chokalingam, anything that you like from any of these names?
JK Tyre one can hold because oil price is down 20%, even natural rubber price is down about 18-19%. And GST reform also positive. So among these, JK Tyre looks best. In fact, all the tyre stocks one can continue to hold.
Bata, if you're holding, and a lot of people would have bought Mr. Chokalingam, anticipating that the benefit from GST 2.0 will come through, the management saying that they've had that's had a bearing in the second quarter, the deferment of purchases. But the question is, how much worse can it get, and would you hold on to this?
One can hold on at current price because the stock has already corrected a lot. And of course, quarterly results are seasonal. One has to wait for another 1 or 2 quarters because only March and June quarter would be very good for this kind of business. So if one can patiently wait for at least 2 quarters without expecting much return, then it's good to buy even at current price for an investment horizon of at least 1 year.
That's a pretty interesting take of Bata coming in. But the space which has been buzzing, that's PSU banking space as well. The government may raise the FDI.
1 year.
That's a pretty interesting take of Bata coming in. But the space which has been buzzing, that's PSU banking space as well. The government may raise the FDI cap in PSU banks from 20% to 49%. A move that could unlock fresh foreign inflows into top names like SBI, Bank of Baroda and Canara Bank. With PSU banks already outpacing private peers, what's next for the sector? Vansh joins in with the analysis. Vansh, what are you picking up?
Well, thank you for that, Sharad. The government may consider a hike in the foreign investment cap for state-run banks for to 49%. Now, if we talk about the current cap, now it stands at about 20%. Now, the government will continue to own above that 51% mark as well. Now, this move is aimed to this move is aimed at the part for broader reforms to boost the economy as well. Also, if we talk about the performance of Nifty PSU Bank versus Nifty Bank, we have seen a sharp outperformance coming in from the Nifty PSU. If we look at the 3 years return, we saw a 131% rally from PSU Bank versus a 40% rally from Nifty Bank as well. Now, if we talk about the PSU Bank's ownership, now what we are looking at in terms of ownership is if we look at the ownership, we saw SBI with a 9.5% holding with the FIs and Canara Bank with 11.89% holding with the FIs. So clearly, Canara Bank and SBI continue to be the top among top holdings amongst the FIs as well. Also, if we look at the foreign interest now, it's clearly rising into India. If we look at some of the recent news, we saw Dubai-based NBD buying $3 billion of stake in RBL Bank worth about 60% as well. We saw Sumitomo Bank Banking acquiring 24% stake in Yes Bank. So clearly this will help more capital coming in for PSU banks, which may aid the further growth for these particular banks as well. Lastly, if we look at the details now, what's in for the PSU banks, if the limit goes up from the current 20% mark to that 49%, this could lead to passive inflows in SBI, Bank of Baroda, Canara Bank and PNB, as they are already a part of MSCI and FTSE indices as well. FI holding across PSU banks currently range between 4.5% and 12%. However, this, as per analysts, SBI could see the highest inflow, followed by Bank of Baroda, Canara Bank and PNB. In fact, if you look at the inflows, now SBI is expected to have inflows about $1,455 million, with Bank of Baroda leading the charts with $206 million of inflow expected as well. So this is how the overall picture is panning out for the entire PSU bank as well.
Yeah, and the pack in focus, as we pointed out to you. Vansh, thanks so much for getting us those details. In fact, let's very quickly pull up the PSU banking pack. We asked Kush earlier in the program what he would pick, and he's picked, if I remember correctly, Canara Bank was something that he liked. But you have Indian Bank that is up about 3.3% at the high point of the day. Bank of Maharashtra also doing well. Union Bank, Punjab and Sind Bank, UCO Bank among the top gainers. But you have the benchmark Nifty 50 that is now recovered practically all of its lost ground, as much as 0.6% recovered, now trading pretty much flat around that 25,950 mark. That 26,000 mark, guys, though, it continues to remain elusive.
Yeah, I mean, where we are starting off, that's where we are going to end. And that is the dilemma right now in terms of markets. Which side do you go? But I think one of the key positives is that the FIs that have started coming back as well, they will somewhere provide some impetus. But the last 2 weeks of December, that's when you might see some bit of a downtick that will start coming in as well, right?
Because of the holiday season?
Of the holiday season. So beginning of December, they start pulling out as well. Now, in this kind of a market right now, will they pull out or not is the question. October is going to be strong. In fact, tomorrow you should be watching out for what the November seasonality usually looks like. And I think Somit will be getting us more details on that. And that is going to be interesting to tell us whether November will see a difference versus the previous years or not. Because this October has been the best since 2022 already.
Yeah, and what is also interesting looking at these seasonality trends is it's not always an indicator of what is to come.
Yeah.
I mean, it's history rhymes. It does not necessarily repeat.
This time, the FI, the shorts, this might be on the lower side when you open. Last month was 94%. Right now we are at 74%.
So that's a good sign.
It's a good sign, and this might be rollover numbers are also looking strong. So we can expect that the FI short numbers might be again on the lower side.
Okay, so that's interesting heading into the next series. Varsha joining in now. You saw some flashes at the bottom of the screen just a short while back, and that had to do with the cabinet approval that came through for the fertilizer subsidy. Quite a significant amount, if I remember correctly, over 35,000 crore rupees. Who stands to benefit? Was this along expected lines? Varsha standing by to tell you about that. Varsha, take it away.
Well, thank you so much for that. You know, all fertilizer stocks are actually buzzing. Now, this is on the back of Cabinet, which has approved nutrient-based subsidy for Rabi season, and the approved amount is almost 38,000 crore, which is up 55% from the last Rabi season, that is 2024-2025. And rates will apply from October 1st, 2025, and FY26, if you see the total fertilizer subsidy is standard around 1.7 lakh crore. Now, which stocks will be benefited? Of course, I mean, almost all fertilizer companies are buzzing. You have the likes of Chambal Fertilizers, Coromandel Fact, National Fertilizers Limited, Deepak Fertilizers. All these fertilizer stocks will be benefited from this subsidies. Now, how? Because one is this will cut import dependency, this will keep MRP stable, and this will help growth in the volumes for the business, and this is expected to boost Rabi fertilizer volumes and will of course support rural affordability and nutrient balance, and will of course help to recover the margins for this fertilizer company. So overall, the 38,000 crores for Rabi season subsidy is what is making fertilizer stocks go bust.
Okay. All right. Let's talk about buy today, sell tomorrow calls. And by the way, Varsha, thanks so much. And fabulous, concise information that you've provided. Please listen into that in case you missed any details, because you'll get all of the answers that you would have required. Ajit, I want to come to you on any buy today, sell tomorrow calls. Would there be any?
Yeah, Alex. So apart from the recommendation which we've shared, CUB, City Union Bank is something that we like. It's been almost 4 years that stock was trading in a very tight range consolidation. Finally, it's a multi-year breakout with a decisive volume in today's session. So we expect this momentum to further strengthen after this breakout. So short term also and positionally also in both time frames, one can look to accumulate this stock. Intermediate or means for a day or two, 232 should be a stop, and 254 is what we are eyeing as the immediate target.
Okay. A pack that has been in focus in the recent past has been the metal pack, and for various reasons, right? And not just talking about ferrous, you talk about the base metals, the underlying commodities have been rising from strength to strength in the prices in the global markets. On account of various fundamental factors, Mr. Chokalingam, it has to be said, right? If you talk about copper, you talk about aluminium. But the question is today, two top gainers on the benchmark Nifty 50, Tata Steel, JSW Steel. Would you buy into ferrous at this point?
I would not buy steel because we have come to know that, the steel prices are at very low in India. And so I would rather go for non-ferrous metals like Hindustan Zinc. Stock also has corrected along with the silver prices. That one stock I think can bounce back. So one can look at aluminum stock and zinc stock rather than the steel stocks. That's my view.
So Hinz, what about the charts? Ajit, anything that you want to add on the metal counters? That two steel majors in the benchmark are looking quite strong today.
So certainly, Alex, and in fact, if you see the Nifty Metal Index also, it's been almost like 1.5 year of consolidation, which has finally ended. And so certainly, Alex, and in fact, if you see the Nifty Metal Index also, it's been almost like 1.5 year of consolidation, which has finally ended. And we usually focus on sectors or stocks which are aligned to the overall outperformance. So Tata Steel high or record highs. So this indicates that this momentum is there. And for Tata Steel, let's say we have this zone close to around 180 where the call writers are positioned roughly around 90 lakh of OI. So the moment we cross this, then probably we are set for 190 plus levels. So definitely you can consider if the view is short term with stop at 177 to go along in Tata Steel. And similarly for JSW Steel also, 1184 is currently its quoting. So with stop at 1160 for the target of around 1220, 1230 is something that one can look for long positions.
Okay. One of the stocks from the brown market is doing incredibly well right now, Chennai Petro, and what a surge in the stock price, up about 9% at this point. The question is, does it have much more in the way of legs in this rally? Ajit, on the charts, would you say that that is the case? If you're holding, should you keep holding?
Alex, volume indicates the same, and it's been almost like 3 times, 4 times of the average volume is that what we are seeing in the stock in the last 2 trading sessions. So this may result in a possible up move towards, let's say, around 900 plus, in case if it manages to cross this 860 barrier. So yes, you can continue to hold your longs. Now 800 on the closing ratio should be your stop.
Well, that's pretty interesting. Thank you very much, Ajit and Chokalingam sir, for joining us and giving us your both technical and fundamental views. But let's move on to the closing session. Today, of course, the expiry impact was also there for the month and also the October series. It was a decent series, but today itself, we saw volatility in the counters. Nifty, looking at it, it's below the 25,950 levels. Nifty Bank, it's a decent one. It's showing a slight positive move around 58,200 odd levels. So key supporting levels have been maintained. But of course, as we go into the new series, there will be new triggers which we'll be watching out for, and I'll mention them as well. Let's pull out the heat map, how the actual movement has happened in the day's trade. It's even Stevens, it's looking like, with the steel counters, that is something to watch out for. These steel counters have gone up almost 2%. Life insurance stocks also there is buying. Auto numbers we are waiting, only TVS Motors numbers has come, but there was an impact there. And on the negative side, Coal India, that's almost down on 1.5%, and Trent also we are seeing some profit booking as well. Now let's look at the advanced decline ratio, how it's actually panned out. Initial trade, we saw a good spike coming in when it was in the favor of bulls, but during the day it was gyrating, and now you see the difference became bigger when it comes for the bears. So right now you see the declines, a slight favor on the advances side. But now let's pull up the BSE 500 index to see the key contributors, how they have actually moved up in the day's trade. TTK Prestige, the strong volumes coming in, stock up almost 10 odd %. Hatsun Agro, we are seeing a second straight day of buying after this strong set of numbers. And even Swan Energy on our exclusive at NDTV Profit on their tie-up with shipyard companies. Bata bearing the brunt of the earnings impact, and Vodafone Idea, this counter is seeing selling pressure after some profit booking coming in. So this is the entire picture coming for the stocks as well, how they're actually panning out during the day. And in this expiry session, it's still volatile as well. But what you should do for tomorrow, that's very important. And of course, Fed meet has also started. Right now, global cues. We also will mention API crude oil stock change will be coming in and in this expiry session, it's still volatile as well. But what you should do for tomorrow, that's very important. And of course, Fed meet has also started. Right now, global cues. We also will mention API crude oil stock change will be coming in industrial production data, manufacturing production data, and going ahead. Of course, there will be some stocks also which should be focused. Initial hour of the trade, EPAC, Genesis. Tomorrow, very important. Coal India, HPCL, LIC Housing will be there, and L&T, India's largest infra company, they will be coming. So it will be very important for the other infra companies as well. And of course, importantly, Fed FMC meeting will also be coming up. And this week, big tech earnings in US will also be there. So global cues will also dictate how the Indian markets go ahead. But that's all for now for India Market Close. Stay tuned at NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about. NDTV Good Times is something that we're supremely excited about.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, let's just see how the markets have fared today first. Nifty ended a choppy day of trade above 25,900 levels. Sensex also managed to recover after declining over 500 points at one point during the day. It shut shop down about 80 points. Let's look at the sectors. So most sectors have ended the day in the red, with realty and IT leading losses. FMCG and defense were also on the back foot. PSU, banks and metals remained resilient in trade today. Let's now look at some key earnings. Chemical major Jubilant Ingrevia has reported a strong performance for the second quarter. Now, this is driven primarily by its high growth specialty chemical segment. Now, on a consolidated year-on-year basis, the company has posted a solid 7.2% jump in the revenue to 1,121 crore rupees, with net profit showing an impressive 17.7% growth to nearly 70 crore rupees. EBITDA has also increased by nearly 9%, with margins holding steady at 12.1%. So management commentary was strong, highlighting that the specialty chemicals portfolio continues to be, the key growth driver there. So the company further emphasized its long-term growth by targeting a peak annual revenue of 1,200 crore rupees from a new large-scale CDMO contract, while reiterating its ambitious, FY30 EBITDA guidance of 2,000 crore rupees. Next up, we have JK Tyre and Industries, which has reported a strong second quarter performance, with its consolidated net profit surging by approximately 64%, and this is driven by a significant recovery in the operating margins. So on a year-on-year basis, the company has seen its net profit jump 64% to 221 crore rupees compared to 135 crore rupees in the previous quarter, in the last year for the same quarter. So revenue also grew by 10.8%, which is nearly 11% to 4,011 crore rupees against 3,622 crore rupees previously. So the management maintains a positive outlook and also expecting a continued rise in demand, particularly from the original equipment manufacturer segment. Keeping the earnings momentum on, automotive component major Sona BLW Precision Forgings is driving ahead with a strong Q2 performance, with quarterly sales hitting an all-time high. So the company's top line has gotten a significant boost from better than expected automotive product sales. Sona BLW's order book remains robust, currently valued at massive 23,600 crore rupees, which includes 1,000 crore rupees worth of new orders bagged during the quarter. So significantly, the future forward focus is clear. Revenue share from the battery electric vehicle segment, or the BEVs, stood strong at 32%. Next up, we have Cartrade Tech, which has posted a strong Q2 performance, with numbers handily beating the analyst estimates. The company's consolidated revenue for the quarter stood at 193 crore rupees. This is marking a 25.4% increase year on year compared to 154 crore rupees in the same period last year. So margins have expanded to 32.9%, which is nearly 33% versus 21.2%, while the net profit also more than doubled to 60 crore rupees. Moving on to a strong earnings report from the defense sector, as Mascon Dock Shipbuilders have posted a robust set of numbers for the second quarter, demonstrating a sharp recovery in the profitability. So here are the highlights there. The defense PSU has seen its margin bounce back, with the EBITDA margin expanding significantly to 23.7% as compared to 18.5 dollars year-on-year basis. But the jump was actually fueled by higher other income and also lower material cost, and it signals that the impact of one-time provisions from the earlier quarter has started tampering off. So on the growth front, Mascot Dock's net profit has surged by a significant 28% year-on-year, and this is clocking in at 749 crore rupees. Operational performance was also strong. So revenue has grown 6.3% there, while EBITDA has jumped 36%. Now moving to the telecom infrastructure space, Indus Towers has reported an inline set of earnings for the second quarter, primarily on the back of financial adjustments and also steady operational expansion. The company's adjusted EBITDA came in at 4,377 crore rupees. This is marking a 2.7% sequential growth. However, this number includes an adjustment from a provision reversal of 190 crore rupees related to doubtful debts, which has aided the profitability. Now on the operational front, tower and tenancy net additions were actually flat quarter-on-quarter basis as growth remained constrained by the lack of fresh rollout from the Vodafone Idea. Sami Hotels makes its debut in the Mumbai metropolitan region with a massive new project in Navi Mumbai. So the company gets MIDC approval to extend the timeline for its 700-room hotel featuring Westin and Fairfield by Marriott. So located near Navi Mumbai Airport and DY Patil Stadium, it becomes Sami's largest property yet. Next up, we have Tata Chemicals, which has scored a legal win in Kenya. So its subsidiary wins a 783 crore rupees land revenue case with the Court of Appeal in Nairobi ruling in favor of the company. So the court finds that the county government's demand arbitrary and also illegal, stating that Tata Chemicals is not obliged to pay the arrears without a clear and accountable framework. Next up, we have Everest Industries, which has received a key clearance for its land sale at Podanur. Now, the Ministry of Environment, Forest and Climate Change grants an amendment in the approval. The deal is worth 133.86 crore rupees payable in tranches. The company has already received 7 crore as the first tranche and is now set to get the second one. Hindustan Zinc viewers has trimmed its silver production guidance after quarter 2. So the company now expects output at 680 metric tons. Silver prices have tumbled 3.7% yesterday after plunging 8.7% in a single day last week. So this is the steepest drop since February 2021. Next up, we have Bata India, which has reported a soft second quarter. Revenue takes a hit from the GST reforms, while earnings are weighed down by the inventory clearance and also higher marketing spends there. Margins have narrowed, and also the company, is booking an exceptional loss linked to a voluntary retirement scheme at one of its factories there. Raymond has posted a mixed bag in quarter 2. Revenue sees a boost driven by strong performance in the aerospace and defense segment. Better product mix and also higher volumes left the margins in that business. However, the tools and hardware division faces pressure in export markets. Overall, the margins remain flat while net profit takes a sharp hit. On to a stellar set of numbers in the retail sector. Ethnic wear retailer Sai Silks, which is also known as Kala Mandir, has reported an outstanding set of numbers for the second quarter of the current financial year, with net profits surging by nearly 69%. So the company's quarter 2 revenue has grown by 28% year on year. This is clocking in at 444 crore rupees. So the strong performance was supported by healthy consumer demand, with same-store sales growth being reported on a strong footing. Now, crucially, if you look at operational efficiencies have driven this profitability. So the company's EBITDA has risen 30% to 72 crore rupees, and margins have seen a marginal improvement to 16.21%. So the biggest boost to the bottom line came in from the financial management, as a reduction in the finance cost significantly aided the overall margins, and this is sending the net profit soaring to 40.1 crore rupees. Viewers, the government is exploring significant reforms to the ownership structure of the public sector banks. Now, among the proposals are plans to increase the foreign direct investment limit in state-run banks from 20% to around 49%. Also, a review is underway of the existing 26% cap on the voting rights for major shareholders. So, any potential changes would still ensure that the government retains a minimum 51% stake in these banks and also maintaining their majority public ownership. So, these ideas are currently at the proposal stage with no final decisions made yet. Now, RBI has returned the application from Jana Small Finance Bank to convert into a universal bank, citing that the bank did not meet several mandatory criteria. So, Jana had applied in June 2025 to become a full-fledged universal bank, moving beyond its current small finance bank status. So, under the RBI's roadmap for such transitions, the bank needs to fulfill conditions such as being listed on a stock exchange, having a minimum net worth of around 1,000 crore rupees, and also posting net profit in the last 2 years and having non-performing asset ratios within the prescribed limits. So, because the application was returned, Jana remains under the small finance bank framework for now. Next up, we have OpenAI, which is offering an Indian user a free 1-year subscription to its advanced plan ChatGPT Go ahead of its flagship event, Dev Day Exchange, and they've shared this on the exchanges on November 4th. The plan, originally priced at 399 rupee per month in India, will be available free for a limited time for those who sign up during the promotion. So the move comes as India ranks among the world's fastest growing markets for ChatGPT. So the special offer aims to deepen user engagement and also promote advanced features among developers, students, and also the professionals. Japan's largest brokerage and investment bank, Nomura Holdings, opens new tab, reported a 6% drop in the net profit over July-September quarter. So Nomura made a net profit of 92.1 billion yen, which is nearly $610.82 million. So over the period, compared with a gain of 98.4 billion yen over the same period a year prior, the results were lifted by a strong performance in the Nomura's wholesale business, where record equity trade revenue coincided with an uptick in the deal making. Viewers, Vishal Shah has been appointed by Mark Zuckerberg to play a key role within Meta Platform's artificial intelligence product division. Now, in his new role, Shah will lead the product management for AI-driven experiences and also report Nat Friedman, head of AI product. Meta is pushing hard to scale its AI ambitions. Now, this move comes amid a wider leadership shakeup and also a cut of some 600 jobs in its super intelligence labs unit, which is an indication of the urgency behind its AI strategy. In fact, Amazon is also aiming big on Indian e-commerce exports. The company says that it has already helped Indian sellers ship goods worth over $20 billion since 2015 and now targets $80 billion by 2030, despite this rising tariffs and global trade challenges. So, Srinidhi, head of Amazon Global Selling India, says that the focus is on strengthening India's export ecosystem. So the program now includes about 2 lakh exporters across 28 states and 7 union territories, offering over 75 crore made in India products to the global buyers. On to some more national news. The government is set to raise advertisement rates for print media by 26%. So the first such hike since 2019. Global buyers. On to some more national news. The government is set to raise advertisement rates for the first such hike elections. So for major listed print publishers where government ads form a significant chunk of the revenue, such as HT Media, Jagran Prakashan and Hindustan Media Ventures, this could actually translate into a meaningful revenue boost. we are getting an update from India's aviation regulator, the DGCA. So they have flagged what it calls repetitive and persistent procedural lapses at Akasa Air following a recent audit. So the watchdog noted multiple shortcomings in the airline's operational and following a recent audit. So the watchdog noted multiple shortcomings in the airline's operational and safety procedures, urging immediate corrective action. So while Akasa Air says that it's cooperating fully with the regulator, the DGCA has made it clear that compliance and safety standards must be strictly upheld. On to some more national news. Prime Minister Narendra Modi has extended his greetings to devotees across the country on the conclusion of Chhath Puja, which is a significant festival dedicated to the sun god. So in his message, the Prime Minister highlighted the festival spirit of devotion, unity and environmental consciousness, emphasizing its importance in strengthening India's cultural fabric. He wished for the well-being and also prosperity of all the citizens, especially those observing the rituals with dedication. Now, viewers, there was a major scare at Delhi's Indira Gandhi International Airport today after a ground service bus operated by Air India caught fire near an aircraft, at Terminal 3. So it was just meters away. Now, the incident took place close at Delhi's Indira Gandhi International Airport today after a ground service bus operated by Air India caught fire near an aircraft, at Terminal 3. So it was just meters away. Now, the incident took place close to the taxiing area, raising an immediate safety alert. Fortunately, but the incident has sparked a review of ground safety protocols at the airport. Moving on, S. Shankar, India's External Affairs Minister, is set to visit Canada in November to attend the G7 Foreign Ministers meeting, signaling a strategic reset in the India-Canada diplomatic ties following a period of cooling relations. So the move follows recent high-level engagements and also reflects growing momentum in cooperation between the two nations. The Supreme Court has rejected the centre's plea challenging a Calcutta High Court order that directed the implementation of the Manrega scheme in West Bengal. So this means that the scheme will now have to be rolled out in the state starting August 1. So the centre had earlier withheld the funds over alleged irregularities, but the court's decision effectively clears the way for the scheme's resumption, ensuring rural job seekers in the state can once again benefit from the program. Now on to some global news. US President Donald Trump continues his Asia tour, landing in Tokyo for talks with Japan's Prime Minister. The meeting marks the second leg of his regional visit aimed at strengthening alliances and also trade ties. Both the leaders reaffirmed their commitment to a free and also open Indo-Pacific, with Trump emphasizing that the US-Japan partnership will be stronger than ever. The discussions also covered security cooperation, North Korea and also economic collaboration, underscoring Washington's intent to deepen the strategic ties in the region. Tetsuya Yamagami, the man accused of assassinating Japan's former Prime Minister Shinzo Abe, on Tuesday has pled guilty. 3 years after the crime shocked the world. The 45-year-old was accused of the murder and of also using a handmade weapon to shoot Shinzo Abe. So Japan's longest-serving PM Shinzo Abe was shot on 8th of July 2022 while giving a speech near the Yamato Saidaiji station in Nara City, Nara Prefecture. Now, although he was airlifted for immediate medical attention, he was pronounced dead at the hospital. Cameroon's President Paul Biya, the world's oldest-serving ruler, secured an 8th term in office on Monday. Election results showed triggering clashes between security forces and also opposition supporters who say that the vote was rigged. Now, backers of opposition candidate Issa, armed with sticks and also stones, blocked off roads. So opposition supporters who say that the vote was rigged. Now, backers of opposition candidate Issa, armed with sticks and also stones, blocked off roads with debris and burning tires in the Central African country's commercial capital, Douala. Tragedy in Kenya. At least 12 people are feared dead after a small passenger plane crashed in a remote area. Local authorities say that rescue teams have reached the site. Though poor weather conditions are hampering the operations, the cause of the crash is still under investigation as officials work to recover the victims and also determine what led to this deadly incident. Now on to some sports news. A big development in the Scottish football there. Brendan Rodgers has left Celtic Football Club. So the announcement ends his latest stint with the Glasgow Giants, where he guided the team to domestic success and also European appearances. So while the club hasn't yet confirmed a successor, reports suggest that internal discussions are already underway. Exciting news for fans of The Family Man. The much-awaited Season 3 starring Manoj Bajpayee finally has a release date. The hit spy thriller returns with Bajpayee reprising his role as Shrikant Tiwari, balancing his dual life as a middle-class family man and also an intelligence officer. Makers promise higher stakes, gripping action and also a storyline set against a new national security threat. Fans can mark their calendars now. The Family Man is all set to make a powerful comeback on November 21st. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
बुझो जरा भी प्यास जिसके हम ना हो।
जान रहे दिल ये तो जान दी है तू मेरे तू।
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks.
Nifty closes above 25,900 after a choppy session. Sensex recovers from a 500-point dip. Sectors mostly in the red, with realty and IT leading the losses. Trading at the Multi-Commodity Exchange of India resumes after shifting a disaster recovery side. All trading systems functioning normally now. Exchange initiates investigation into the issue. Melly Mistri's reappointment for life trusteeship at Tata Trust reappears uncertain after 3 trustees rejected the renewal, deepening the divide within the Tata Trusts. Government mulls major FDI reforms for public sector banks may raise the cap on foreign investment to 49%. Sources indicate 26% cap on voting rights in private banks may also be hiked. Amazon plans to cut 14,000 corporate jobs in the biggest layoff since 2022. The commerce giant aims to curb costs and reverse pandemic-era overhiring. Cabinet approves nutrient-based subsidy worth 37,592 crore rupees for Rabi crops to be applicable on phosphatic and potassic fertilizers effective from the 1st of October this year. Gold and silver lose shine as prices slide over 3% in today's session. Gold is down 3.2%, while silver falls 3.7%. India anticipates 40 to 60,000 tourists in FY26 as direct flights between India and China resume. Tourism hopes rise with improving tides. Cyclone Montha nears Andhra coast as is expected to make landfall this evening. Heavy rain and strong winds lash coastal districts of the state. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour of this bulletin, we will be taking you through the day's most important news stories. Let's begin with checking how the markets performed today first. It was a volatile day of trading on the benchmark indices. The Nifty managed to close above the 25,900 level, while the Sensex recovered after falling over 500 points during the session. Most sectors ended the day in the red, with Nifty, realty and IT leading the losses. FMCG and defense were also on the back foot today. But let's go across to my colleague Varsha, who would join us and help us decode what all happened in the market today.
Yes, so benchmark underperformed broader markets. Nifty end in red. Tata Steel and JSW Steel are the top gainers when it comes to Nifty 50, while Nifty top losers are Power Grid and Nestle. Nifty PSU Bank emerges as top sectorial gainers, and the gains were led by Bank of India and Indian Bank, while Nifty Realty emerges as top sectorial loser. Losses were led by Brigade Enterprises and Raymond Realty. Mid-cap gains were led by IDBI Bank and Suzlon, while small cap gains were led by Newgen Software and Chennai Petro. When it comes to Nifty Oil and Gas, it snapped 2-day gaining streak. Nifty Realty snaps 3-day gaining streak, while Nifty Pharma falls for the 4th day in a row. Nifty Metal gains for the 5th day in a row, and Nifty Media falls for the 3rd day in a row.
Thanks for that, Varsha. Now let's bring you some market opinion. Mihir Vora of Trust Mutual Fund believes that India-US trade deal is the trigger that Indian market needs at the moment. He added that the deal could also bring FIIs back into India. Let's listen into his argument.
We did talk about the fact that India has not done much in the last 12 months. And not only in absolute terms, but in relative terms, it's even worse, because the US markets have done extremely well. So India has been a laggard now for a good 12 to 15 months. Of course, before that, almost for 4 years, we were the best performing market. So some kind of consolidation was anyway necessary. But the fact is that we have underperformed, and there is a bit of a catch-up that is required. And I think the trade deal will be a trigger for that. I don't think we can afford to not have a trade deal. So we are not talking about, no deal at all. It will happen maybe in 2 weeks, maybe in a few more weeks, I don't know. But the fact is that it will happen, and that's a trigger that the market requires, because you can't have FIs selling every day. Right?
That is reversing as well. That trend is reversing
The
as well.
selling has reduced, but it's not a huge inflow yet.
So covering is taking place.
So while the domestic institutions have supported the market brilliantly, the retail investor sentiment is still strong, but you can't have a situation where FIs are sellers continuously for months together.
And trading came to a standstill on MCX today as persistent technical glitches disrupted operations on that platform. From unconfirmed orders to delayed settlement files, brokers say the platform has been in fact plagued with such issues for years now. Trading, however, after a few hours resumed. But to get us more exclusive details on what went wrong exactly, let's go across to my colleague Charu.
India's biggest commodities exchange, that is the multi-commodity exchange MCX, which is a listed entity, is going through another tech glitch due to which their main website is down. While the website was supposed to be up and running by 9:30 a.m., there is no clarity with regards to when it will finally be up and running. Now, this is not a first time that something like this has happened to MCX, because in the month of July as well, on July 23 to be more precise, the website had gone down due to a tech glitch yet once again. Now, as per several sources that NDTV Profit has spoken to, this is a recurring issue. For the past 2-3 days, there were tech-related issues that the brokers were bringing up. Before this also, for the past 2 years, there have been issues regarding tech which have been, placed before the exchange. Currently, the CPAI, which is the Commodity Participants Association, has asked for a meeting with the chairperson of MCX, saying that these tech glitches are recurring. This was done a few days back, and they're expecting a response by next week. Apart from this, we must understand that these are tech glitches, and there has been no specific issues, relayed to the press or the industry stakeholders as to specifically what kind of tech issues these are. That's all we know for now, and we are waiting for the websites to be up and running. Till then, it is going to be running on the DR side, that is disaster recovery side. Let's see what further developments roll out.
And there's big development from the Tata Group internal rift. Mehli Misri's reappointment as a Tata Trust trustee appears unlikely at the moment. Sources indicate that the rift within Tata Trust is in fact widening. My colleague Nisha Podar, she is the executive editor for corporates in NDTV Profit, joins us with the latest details on the matter.
Tata Trust's rift has not just intensified, it has clearly reached a breaking point. With the two factions, non-nominees on the board of Tata Sons and nominees on the board of Tata Sons, these two factions have not been seeing eye to eye, and it has reached to a point where Melly Mistri's renewal on the board of Tata Trust, and not just renewal, but the permanent membership as life trusteeship has also been rejected by the faction which is nominee on the board of Tata Sons. Namely, we do gather from sources with direct knowledge that Venu Srinivasan, Vijay Singh as well as Noel Tata have rejected the renewal of Melly Mistry. Now, this also casts the spotlight on Venu Srinivasan's renewal. It was recently done in the month of October, where Melly Mistry had approved to his renewal, but with a condition that all the subsequent renewals will be approved unanimously by all the members of the trusts. Now, with this particular development, whether Venu Srinivasan's reappointment or renewal, is that going to come under question, is to be seen clearly. Second, what is the outcome of this particular fight? First, we do gather from sources that Melly Mistry could be exploring legal options in terms of solution, and here the main point of legality is the October 2024 resolution that was passed on the renewal and permanent membership of these members of the board of trusts to really have life trusteeship. So that will be the point of contention. We need to see what measures are being taken by Melly Mistry going forward, but also to remember, with the trusts not coming to conclusion and the fight intensifying, the government had intervened some time back. Whether or not the charity commissioner can take steps and intervene into the matter will be a very, very important aspect to be watched out for, because ultimately Tata Trust's entities are the largest shareholder in Tata Sons, and they have a lot of bearing on the strategic thinking and also dominance on the major decisions of Tata Sons.
We spoke to Sriram Subramaniam of InGovern and Abhizar Devanji of Neo Strat Advisors. Here's what they make of the widening rift at Tata Sons.
The rift, if Melly Mistry is now not reappointed, definitely 3:3 on the boards of the trustees at Tata Trust would definitely impact strategic decisions at Tata Sons, because Tata Trust has a veto vote on key decisions at Tata Sons. So on a day-to-day basis, Tata Sons is unlikely to be disrupted, but in strategic decisions, there could be disruptions, because Tata Trust needs to vote with a veto vote. If Tata Trust itself abstains or doesn't have a split, then definitely the decisions at Tata Sons will just hang in the limbo.
Very clearly, we are talking about the Tata Trust issue. This has nothing to do with Tata Sons or its governance. Point number one. Point number two, from a trust perspective, I think if it was documented and resolved at the trust level, that the trusts have to be unanimously appointed, then there was, I think, a reasonable situation to say that this would get litigated. But if it is not being passed in the trust accounts, then clearly the earlier voting system would apply, and which may have panned out today. So ideally, can a charity commissioner come in and step in? Yes. I am not sure whether a charity commissioner can do justice to something like Tata Trusts, which very frankly has been operating extremely well, except for the current rift.
Moving on, big moves could be on the cards for India's banking sector. Sources tell NDTV Profit the government is considering a major round of FDI reforms, possibly lifting the foreign investment cap in public sector banks to 49%, all while maintaining or retaining majority control. Let's go across to Vishwanath Nair, Mumbai Bureau Chief at NDTV Profit, for more details on these potential FDI changes and what they could mean for the sector.
So what we understand from sources at this point in time is that there is a proposal that is doing the rounds at the highest offices of the government, which is talking about a 49% FDI cap for public sector banks. This is while the government will still continue to hold at least 51% in these banks. This is to ensure that the government still remains in control and these banks have that state-owned tag with them. But the goal here is to lift that limit from 20% to 49% as a way to invite more foreign capital into these banks and to build these large-scale banks which are globally competitive. Now, that's something that the government has stated previously, that they want globally competitive large banks in this country. At this point in time, SBI, HDFC Bank and ICICI are the three big, big beasts in the banking sector. But the goal is to, of course, create more. The other idea is also to relook at these the voting right caps that these banks currently are proposed under. Back in 2012, that voting right cap was lifted from 10% to 26%. Since then, there has been no review of this voting right cap, and even in recent deals, for example, what happened with Emirates NBD and RBL Bank, there the buyer has agreed to keep its voting right at 26%. That puts them at a significant disadvantage because they hold a large stake in the bank, but they don't have the commensurate voting right cap. So what our sources are telling us at this point in time is that the government is reviewing this cap and seeing the need to increase it further if need be. I'm repeating myself again, this is currently only a proposal. There has been no firm decision that has been taken yet, and a decision may or may not happen depending on how the government reviews this. This is, of course, part of a broader plan to revamp the ownership of banks and also to ensure that the capital that banks have, the sources of capital that the banks have, that also widens, bringing in so much interest. From what we understand from sources, is that the government has received a lot of input from foreign investors, a lot of interest from these foreign investors, specifically from North America, Japan, as well as the Middle East, so that they've asked the government to ease up on these norms so that they can come in and invest in these big banks. So whether the government does this or not is something for later, but the thought process is ongoing, and that's the story that we're bringing in today.
As Vishwanath said, the expansion of the FPI investment cap on the PSP space is a proposal at the moment. But let's now shift our focus to our coverage of the Maritime Week Day 2. Swan Defence and Heavy Industries highlighted its plans to be a key part of the Defence Ministry's growth story. The company has partnered with Mazagon Dock for the RFP process of landing platform docks for the Indian Navy, a project which is valued at 33,000 crore rupees for 4 vessels. My colleague Agnidev Bhattacharya was there and he caught up with the management. Let's listen in.
As Swan Defence and Heavy Industries, we are planning to participate in the Indian Atmanirbhar Bharat program and also furthering the Indian Ministry of Defence growth story. In that regard, what we have done is we have tied up with MDL, Mazagon Dock Shipbuilders, to participate in the landing platform dock project. It is a 4-vessel project which has already received the approval from the Ministry of Defence as a project. We thought it would be good synergy between the experience and the track record of MDL and the infrastructure and the agility that we have at our shipyard to partner up and sort of deliver a product in as quickly as possible and as technologically advanced as possible to the Indian government. So we're excited to partner with MDL.
And viewers, Amazon is reportedly planning a massive reduction in its non-warehouse staff, targeting as many as 14,000 corporate jobs starting this week as the e-commerce giant works to pare expenses and correct for pandemic era over-hiring. My colleague Rishabh Bhatnagar joining us now for more details on the same story. Rishabh, I've also heard that this is one of the largest layoffs being conducted by Amazon since 2022. Is that right? And what else are you picking up on this?
Right, Malika, this is still the biggest layoffs that this e-commerce giant has seen since 2022. Remember, the number that was reported earlier by Reuters was roughly 30,000, but now we have an official statement that has come in from Amazon. And what they've said is that they will be cutting down about 14,000 roles. And again, the reasons that they've given is to reduce bureaucracy, reduce the number of layers in decision-making. Essentially, what this company is doing is what a lot of companies are doing, which is to essentially leverage technology, bring in more and more automation, and thereby reduce the roles wherein there's a lot of redundancy built in, and thereby eliminating a bunch of these 14,000 roles globally. What we're also picking up is the fact that these are across teams such as HR, across parts of Amazon Web Services, across various devices teams as well within Amazon. So that is something that we're picking up. What we don't know so far is the India impact that this will have. That is something that is still being figured out. But what we're seeing is that this is a very clear strategy in terms of cutting costs by CEO Andy Jassy. What Amazon is saying that they will still continue to hire about 2.5 lakh more temporary roles, and that is in preparation for the upcoming festive season. So we'll see more and more of these seasonal employment generation by Amazon, but a large chunk of permanent roles, about 14,000 being cut due to technology-led advancements.
Right, Rishabh. 14,000 jobs being cut due to technology-led advancements definitely is a big development to take note of, especially when it comes to a big e-commerce giant such as Amazon itself. Thank you so much for that update. Now, let's move on. Gold and silver prices have been the attention of investments for so long right now, especially with festive season booming in. But this rally seems to be losing some steam, with prices rumbling over 3% in today's session. What are the triggers for this pullback, and can prices really claw back? Let's go across to my colleague Shreyansi for more details on the same story.
Well, absolutely. When you take a look at gold and silver prices, a bit of a pullback is what you're seeing after that scorching rally that we've seen for much of this year. When you take a look at gold, that's down about 3.2%. As of yesterday's move, 3.7% in terms of the move yesterday for silver as well. And last week as well, you saw quite the bad close coming in, negative close for the first time in 10 trading weeks for gold. And when you take a look at silver as well, largest decline coming in since February 2021 on October 21st, which is when gold also registered that largest single day decline since 2013. So those are some of the kind of moves that you've seen coming in. In terms of the move from all-time high, you do have gold that is down about 9% thereabout, silver down about 13.8% thereabout. When it comes to the all-time high, in terms of the factors why you're seeing this sort of cool off, when it comes to precious metals, the number one thing on that list is renewed optimism on the back of US-China trade deal. So that optimism, in fact, is chipping away at safe haven demand at this point in time. Other than that, there's profit booking that also makes it to this list. And when you take a look at the gold and silver price tracker as well, it's very important to note that silver is no longer playing second fiddle to gold, and it's also risen more than gold prices on a year-to-date basis. Gold still is set for a very big gain, best year since 1979 is what you're looking at for gold. And in terms of macro drivers, they're still very much intact, and the Fed rate cut hopes for much of this week are going to be the talk of the town when it comes to gold, because you do have a 25 basis point rate cut that we're penciling in. In terms of the brokerage forecast as well, quickly, when you take a look at Morgan Stanley as well as Deutsche Bank, they seem to be a little bit bullish at this point in time. Citi, in fact, is bearish, so a little bit of a mixed verdict coming in as far as brokerages are concerned. But at this point in time, this is what gold and silver look like.
Well, thank you for explaining us a bigger picture on gold and silver prices. But viewers, let's turn our attention to a rather important and international story. After nearly half a decade, direct flights between India and China have resumed. The Indian tourism industry has high hopes as India and China's ties are on the path for improvement. Let's take a look at our colleague Danish Anand's special story on the same. Nearly after 5 years, India's largest carrier, Indigo, kicked off direct flights to Guangzhou in China from Kolkata from October 26th. On the other hand, Chinese carrier China Eastern Airlines will be starting flights from November 9th, connecting Shanghai with New Delhi. This fresh development has come on the backdrop of thawing relationship between India and China, which was impacted since 2020 because of COVID and border clashes. India's tourism industry has welcomed this move and believes that it is going to benefit the industry on both sides.
We expect that there will be 2,000 weekly flights between China and India, which can ferry around 25 to 30,000 Chinese tourists to India by this financial year, March 2026. Pre-COVID level, there were around 340,000 Chinese tourists was visiting India. And I think it will take 4 years. By 2029, we will have this tourist arrivals in India.
India's overall tourism arrivals crossed the pre-COVID mark in 2024, surpassing the 20 million mark. Industry believes that India's foreign tourist arrivals could have crossed the pre-COVID levels earlier if Chinese tourists would have been visiting India.
3.40 lakh Chinese tourists visited India in 2019, which is the highest ever Chinese tourist inflow into India. The industry expects around 35,000 to 40,000 Chinese tourists to visit India by the end of FY26, and it expects this number to gradually go up and expects full recovery of Chinese tourists visiting India by FY29.
In the national interest of China as well as India to soften the relationship, and travel and tourism is one aspect. It's the first step towards normalization of relationship.
Well, India's tourism industry is gearing up to welcome Chinese tourists, and for that, the industry has started to revive certain Buddhist circuits. They're ensuring that there is adequate number of Chinese-speaking guides that are available, and they're also customizing itineraries as per the Chinese preference. Well, the industry is also exploring OTA platform partnerships and also influencer partnerships in China. Moreover, the industry is also planning to do road shows in Guangzhou, Hong Kong, Shanghai, Beijing, so that they can get more Chinese tourists into India. With video journalist Suraj Singh, this is Danish Anand for NDTV Profit.
Moving on, to fight back Delhi's toxic air, the Commission for Air Quality Management has rolled out a tough new rule. Starting November 1st, trucks and commercial goods vehicles from outside Delhi that don't meet the clean BS6 emission standards will be barred from entering the capital. This targets older, dirtier diesel vehicles like those with BS4 norms that spew harmful pollutants, worsening the haze. Why the rule now? Well, Delhi's air quality index has worsened, fueled by farm stubble burning in neighbouring states, vehicle exhaust and construction dust. The ban is part of the Graded Response Action Plan to slash emissions fast. It's important to note that the BS4 trucks get a 1-year grace period until October 2026, and transporters but aren't thrilled though. They are grumbling about logistics headaches and hinting at asking the Supreme Court for more time. But for Delhi's residents choking on fumes, this could mean a breath of better air. Moving on, the Cabinet today approved nutrient-based subsidy worth 37,592 crore rupees for Rabi crops. The subsidy will be applicable on phosphatic and potassic fertilizers effective from the 1st of October this year. My colleague Varsha now joins us to tell what the subsidy means for fertilizer companies.
All fertilizer stocks are actually buzzing. Now this is on the back of Cabinet, which has approved nutrient-based subsidy for Rabi season, and the approved amount is almost 38,000 crore, which is up 55% from the last Rabi season, that is 2024-2025. And rates will apply from October 1st, 2025, and FY26, if you see, the total fertilizer subsidy is standard around 1.7 lakh crore. Now, which stocks will be benefited? Of course, almost all fertilizer companies are buzzing. You have the likes of Chambal Fertilizers, Coromandel Fact, National Fertilizers Limited, Deepak Fertilizers. All these fertilizer stocks will be benefited from this subsidies. Now, how? Because one is this will cut import dependency. This will keep MRP stable, and this will help growth in the volumes for the business. And this is expected to boost Rabi fertilizer volumes and will, of course, support rural affordability and nutrient balance, and will of course help to recover the margins for this fertilizer company. So overall, the 38,000 crores for Rabi season subsidy is what is making fertilizer stocks go bust.
Thanks for that, Varsha. And viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to the channel as we continue to give you a lot more news and updates.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally we come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
Hello and welcome to KYC. I am Sharad Dubey and company on KYC's radar today is Tamil Nadu Mercantile Bank. Of course, on the back of the earnings, the stock is also buzzing in trade. But the question remains is why we have taken this company in our segment. What does the street actually want to know about the company? Of course, the first question is, will they achieve their high FY27 targets? That is something which we have been looking out for. And of course, the numbers which they have given post their earnings, it looks like there might be a chance of even an upgrade in their overall targets. Let's point out other important questions also which poses here is why the growth expansion plans, where will it be? Will it be the digital space? Will it be the non-Tamil Nadu market space? These are the questions which we will be asking the management as well. And interestingly, will the asset quality numbers improve? That's also a question we will be asking around. And the NIMs bottoming out, that's roughly around 3.9 odd%. Will that trajectory move as well or not? Of course, this is the important number which we had focused on. But let's move on and discuss about what are the key details about the company as well. And then we'll move on to the most important thing, which is the Q2 earnings. And then we'll start our parameter rating. The companies are almost 104-year-old private old bank in the sector. Pan-India, they're having roughly 600 cities, and I mean to say the branches and the expansion is going on an aggressive way. 12 regional offices across 17 states, and if you put it across, they also have coverage in the union territories as well. And they have interestingly a 250 crore fund provisions for COVID as well as ECL emergencies which have come by the RBI. Q2 earnings, that's what the street is actually looking for, and let's just go into it. Decent set of numbers coming in. If you look at it, the asset quality has improved. Lowest GNPA in the last 10 odd years. Cost of funds, we saw a slight decline coming in, and overall there is a decrease in the credit costs, and NIMs, as you have largely pointed out, were largely flat. Numbers, the headline numbers, let's just revise that. Net interest income, not much happening, that's around flattish growth.
coming in, but provisions that has come down, that's roughly around 69% degrowth coming in. But the number which has been the talk of the town are the gross GNPAs. That has significantly come down. Net NPA is also coming down. So they have almost achieved the status of the GNPAs of 1%, which they had targeted for FY27. Net profit, not much to share about, and that's not a parameter to actually track also for a bank. Net profit is up around 5%. Some adjustments were definitely there. But the question remains is, this show has a rating parameters. What are those rating parameters? They are very important, and based on that we will be judging this company, and of course the management will be also answering our questions as per the show. Income statement, balance sheet, asset quality, return ratios, we have tweaked a bit our parameters because it's a banking company. Share holding, street trade, valuation and outlook is something which we'll be watching out for. But without further ado, let's start the innings. First one, of course, is the income statement. Largely, we see not much happening here. Net interest income just 8% 3-year CAGR. Operating profit also in single digits. Now, if you're seeing the entire industry going in, you could say the early teens, and the numbers over here, if you look at it, not that appealing. So, and including the provisions numbers, that has actually seen an uptick as well. This is just the FY25 numbers. The Q2 numbers were, of course, definitely on the lower side as well. But net, if I had to give a number, it would be a thumbs down for the company in the initial stage, because I was judging the income statements. But from income statements, let's move on to the balance sheet. That's a very important component, especially with the new Basel norms and everything kicking in for the banking space. The metrics, they generally look decent. Not much action actually happening. Gross advances is up almost 10% 3-year CAGR, and deposits on the lower side. That's interesting. That's around 6% CASA. The management commentary also in the press release was, kind of on a positive side. But net in current levels, I would suggest what the data we are having, it's a neutral impact. It would be a 0.5 point if I had to give. Asset quality is something very important, which I'd like to point out, and that has been doing really well. We saw that in the Q2 numbers, how nicely it has panned out. But the GNPA numbers, you have a look, it's at around 1.4. It went up in FY24, but then there has been a good reduction, roughly you could say a 19 bips cut happening. Net NPA also, the story remains the same. That means the asset quality is improving, and these small, if you say that these small parameters which are there, now once these small banks themselves, their asset quality starts improving, then they become very attractive also for the future growth potential. That's why net, the asset quality numbers have been strong, and this quarter itself, if we see, they have actually declared that their asset quality is the best in the last 10 years quarter-wise. So I would give a thumbs up when it comes to the asset quality. So currently just revising income statement, I have given, you could say, a positive, a negative thumbs down coming in, but for balance sheet, it's neutral, and for asset quality, it's a thumbs up. But apart from this, return ratios is very important, and one by one we will be discussing the return ratios coming in. Not much happening on the yield on loans front. If you look at it, it's actually kind of down by roughly 10%, and it's actually stable here. And the deposit cost, that's roughly ranging between 8.7 to 9%. So not much improvement coming in the first two parameters which I just discussed. NIMs, these are on the higher side, and they have been coming down. And roughly 3.9% is something which we are looking at the current levels, and this is expected to stay in the same level. So whether this bottoms out or not, that time will suggest. And right from the presentation and the press release, what we saw in the Q2, it doesn't look like when it comes to the NIMS numbers. Income cost, that is also there. It's kind of stable, nothing much happening. But return on assets, that's the most important criteria when you judge a bank. So ROA, that is something which the company is targeting for FY27 at 2%. It hasn't reached it yet, and it's currently actually on the downward path. If you compare that FY23 number with FY25, it is still having a gap of almost 10 bips, and that's a bigger gap when it comes to ROAs. So net, nothing great about the return ratios coming in, and I would be giving a thumbs down when it comes to these companies. Now, interestingly, let's move away from the financials, all the ratios. Now, let's focus on other parameters as well. Shareholding pattern. Shareholding pattern, I will just give a caveat to our viewers that almost 90% plus shareholding is there in the public as well. There is no promoter definition as such. It's 100%, you could say, a free float company. And interestingly, there hasn't been much changes. That's why we have not put that in graphics. But FIs and DIs, that is very important. And you see, FIs have remained kind of stable. It's around 5% and DIs also 2%. Actually, there has been a decrease. If you see the numbers, the DI numbers, that has actually come down as well. And this FY23 data, it was at 5% and that has come down to 2%. So I would be giving, for institutional participation, either lack of it or very less participation coming in this counter. So I would be giving a thumbs down to this as well. Street cred, not much returns given to investors as well. Not that famous and discussed also in the social circles, but the stock itself, look at it, not much happening for the stock. Of course, last 1 month there was a performance, but we saw most of the banks rallying as well. So there was nothing superlative performance about the bank. But in the details, when I went for the 3 months, 6 month, 1 year, nothing much happening, everything in single digit. That means the street cred is still on the lower side. So I would be giving a thumbs down for this as well. So this is the entire picture, coming up for the street cred as well. And valuations, that's also something to look out for. Not much analyst coverage. I think there's only one domestic broking house which is actually covering TN Mercantile Bank. But apart from that, as per our calculations, we took a trailing 12-month price to book ratio. And there is a reason why the street is not giving premium to this bank. We have seen a good run up in other banks happening, especially the mid and small cap, the way acquisitions are happening or a foreign interest is coming. But that second order effect is not coming to these banks. TN Mercantile's average valuation is coming at almost 0.7 times its price to book ratio. While we compare it with peers, this is of course Bloomberg's peers, all these small and mid cap banks. Some are private, some are PSU banks, but net they are still trading at a 50% discount. That's almost 1.4 times. So that's the question is, if all the banks are rising up, why is this company trading at a, you could say, a discount, and that also 50% to its peers? So that's a question, arises. But there's another way to look at it as well. Like, this company is still valuable. That means there is a lot of value on the table as well. And if the operational parameters are improving, which was there in Q2, and management commentary has been showing a good strength in the day's trade also, the stock has moved a lot positively, which had actually compared it with the last year itself, the move has been on a bigger side. I would suggest that the valuations are very comfortable for this company, and because of that, there will be a thumbs up being given for this second last parameter which we are tracking. So we spoke about valuations and street cred and shareholding, which were of course the non-financial numbers, but there's a last but not the least. It is the outlook. The outlook is very important for the bank, and because of that, the street is giving a bit of premium and a catch up to other banks as well. It's the lowest GNP in last 10 years. Strategic innovations, while reading the investor presentation, two things struck my eyes: transaction business and elite service. These are niche, high margin businesses where the commentary is very important to look at. And the two numbers which is stand out, FY27 targeting 2% ROA, still below that current level. 600 branch networks is current number and 700 is the target. So it looks achievable as management stance suggests, and the GNPA, that's expected to sustain at 1%. Not much changes happening here. But net, the outlook is why the street is giving a premium in the day's trade as well. Today's stock is up. But let's just check out the rating parameters, how important this is. And of course, the ratings, first of all, we would like to point out the income statement, not much happening. Balance sheet, it's decent. So we have given a neutral rating. Asset quality, that is an important factor to watch out. They have done well. Return ratios below subpar when it comes to the overall bank and the industry as well. Shareholding, not much happening. Actually, the institutional participation is coming down. And street cred, nothing much returns coming to the investors as well. And because of that, valuation becomes attractive, and that's why I've given a thumbs up. And lastly, the outlook. That is something which the street is actually getting bullish on. But net, still it's on the lower side. Currently, I'm giving a 3.5 out of 8 when it comes to the overall ratings in the KYC segment. But interestingly, of course, this is the current situation. In the future also, we have of course taken in as well. But to understand more about the future, we also had a conversation with Sally S. Nair, the MD and the CFO of the bank. and he'll give us entire details about the entire setup of how the earnings had actually panned out and what lies ahead of the street. I just want to get into much more details about it. Largely, the street has factored in decent set of numbers coming in. Asset quality has improved in its lowest GNPA in the last 10 years. Now, the first question is your Q2 update. What was the important operational parameters which actually stood out? And of course, we also want to know that will this lower GNPA ratios continue going ahead?
What stood out? First, of course, thank you, Sharath. Thanks for having me on the show. What stood out or what is standing out is actually not the GNPA. Of course, you did mention the GNPA is 1.01%. But this quarter's highlight is actually the growth. The growth that we have revived and is reviving. I think going forward that you will see what I am stating today sort of pan out and play out. The growth is at 11.4% in the quarter. The overall total business growth is at 11.40%. And the deposits, which was a concern for many in the past, is up 12.32%. So that's a number that we are fairly proud of. And that you will see accelerating in the coming quarters. And again, the CASA, again, a concern for the industry and concern specifically for us, is up 9.30%. And in fact, from the 31st of March, the CASA share has gone up 92 basis, and in the quarter itself, it is up 58 basis. So advanced growth, again, the momentum is picking up. So it is the growth that is the highlight of the quarter. Yes, GNPA, you are answering your earlier question about GNPA. 1.01%, yes, that will be continue to trend down. We are anticipating it to be lower in the next quarter and the coming quarters.
Well, that's very interesting about it. One more question is there on the NIMS front in the Q2 numbers. They were largely flat, which I saw the numbers. It's coming at flat at 3.8% on a sequential basis. Will this bottom out going ahead, like what the industry peers have been talking about, or is there any other commentary coming from the management?
You are right. The NIM is actually flat, I think, from 3.84% to 3.83%. And of course, it also has a direct impact on our consequential impact on our deposit portfolio. Our deposit portfolio is oriented towards 1 to 2 year bucket, which on a fixed rate, which typically takes about 3 quarters at least to sort of give us the results. And I think that's the reason why it continues to be flat. But going forward, I think we are looking at about 3.85% for plus or minus 5% in the remaining 2 quarters for the current year. That's where it is. I think a NIM for us is not a worry. I think it's still flat, but 3.85% is what we will be picking it up even going forward. We don't expect it to go down further.
Well, that's very interesting, and of course the FY27 outlook that has been given by the company as well earlier, which I would like to target. They're targeting a 2% ROA, 700 branch network, and GNPA likely to sustain near the 1%. But this quarter itself, you see the numbers on the growth front have been on the higher side. Are you looking at upgrading the FY27 guidance, or will you stick by what you had said earlier?
On the growth guidance, we will be a little more aggressive in the sense that, I did mention that the deposit growth will be in the 11 to 12% range for the current year. I'll take that next year a little later. 11 to 12%. And I'm confident that the deposit growth in the current year will be in the 12 to 13% in the current year. And the CASA, and I'm hoping that will be in the 12% range, thereabouts. And the advances would be in the 14 to 15% range. So that's where I think the momentum is picking up. We can see it happening. When I look at the numbers on a monthly basis itself, I can see the momentum happening. And that's where we are likely to see the current year close. Like I said, 14 to 15% on the advances and 12 to 13% on the deposits. And the next year, I think we will be well over 13% on the deposits particularly we are seeing momentum happening in the CASA. I think the CASA share will sort of revive and start moving up. I think some of it that we lost, I think we will be able to regain next year. And it will be certainly 15 to 18% on the advances. That's where I see it.
Well, that's pretty interesting regarding that. And one more question is there, Sully, that the growth expansion plans, that has also, the street has kept your stock under the scanner. And now the interest is coming back, especially on your non-Tamil Nadu markets and their expansion plans. And the street wants to know, what are your growth plans? What are the additions happening in the branches? I know that it's largely a physical-led business, but a digital angle is also coming. We'll get to that in the next question. But right now my question is, what's your expansion plans in the non-Tamil Nadu markets?
See, I should have stated earlier upfront that we have actually opened 600 branches. Right? That's one of the highlights of the quarter. Anyway, 600, that's strong we are. And not only we have opened 22 branches so far, we have also laid the foundation for opening another 36 branches in the remaining part of the year. And 12 of that is going to come from outside Tamil Nadu. So typically when we close the year, 27%, we were about quarter of non-Tamil Nadu branches. I think we'll be somewhere around 27% by the year end. And that over a period of 3 years, we want to take it to at least 35%. So some of the branches that will hereafter be opened would be coming from outside Tamil Nadu. In fact, not just the branches, we are also on a recruitment drive to staff them with people, locally connected people outside Tamil Nadu, so that the resource also has got a cultural and a local connect. So that simultaneously is on. So branches are being opened, the HR strategy is also being pursued to staff them. Yeah.
Hello, pretty interesting. Nair sir, one more query is coming in. I was reading the investor presentation and two important things came into my eyes. The first is transaction business and second is elite service business. Could you just explain these two new segments? I'm assuming these are high margin business but very niche in development stage. What are the strategic plans building up here? Could you just explain us and give us a glimpse into the future?
Transaction banking business is what everyone knows is the transaction banking business, right? It is focused on the current accounts. I think we were pretty strong in the current accounts a few years back. We want to get that mojo back, So essentially it is focused on the current accounts. It is focused on the task accounts, the government accounts, and the government sector, and the task, like I said. So this is something, we have put in place relationship managers across some of our strategy branches, and getting the local mercantile population attracting them back into the fold, and that you can see the results coming out in the CASA share, right? As I mentioned earlier, in the 6 months we have recouped CASA share to the extent of 92 basis points, and in the quarter itself we have done 58 basis points of up in the CASA share. And as regards the elite services group, now that's something that we are trying to ring fence some of our larger deposit liability customers, providing them all kinds of services, including doorstep banking. So that's something that again we have chosen a few branches. I think 38 of the branches we have chosen to have this in place in the phase one. That I think that is also taking roots. And again, let me tell you, these two initiatives are where we see the deposits reviving, and we have reached where we are. Which is 12.34%.
That's very interesting, Nair sir. But I have an industry-specific question for you. And we have seen over the last, you could say 3 to 6 odd months, there have been so much action from the international players in the BFSI space, where they are either taking stake, be it the unlisted space, be it the listed space, and even the government himself, they are trying to get the foreign ownership up as well. Or even there's a JV or tie-ups are happening. Are there any JV tie-ups or any interest from foreign capital looking like for Tamil Nadu Mercantile Bank as well? Or are you just looking forward for, just JVs also for international expansion? Because I am seeing even in the smaller banks also there are talks happening for foreign interest and foreign capital coming in.
Agree, Sharad. There's a lot of action happening in the market, in the industry, because of course the consolidation is the name of the game. And the government certainly wants at least a couple of banks to be in the top 20 going forward to push Vikasit Bharat agenda. But as far as Tamil Nadu Mercantile Bank is concerned, there is no talk at the moment of any kind of foreign interest or foreign participation. But nothing can be ruled out going forward.
Nothing can be ruled out forward. So that's a very important statement actually coming in, and that was the question I had asked the management, and Sali sir has stated that right now there is of course no foreign interest coming in, but nothing can be ruled out. So that's a very important open-ended statement coming from the management as well. But interestingly, we did the entire KYC setup, and I would just like to revise in case our viewers have just seen the interviews and who just logged in the middle of the show, that we had done the almost 8 parameters coming in the show. And overall, let's see how the numbers we have given. Income statement, largely we have given a negative kind of a review coming in because their CAGR growth of the most of the parameters were on the negative side if you compare it with the industry names. Over their balance sheets itself, not much there to be honest, but not an explosive growth also coming in, but a neutral impact coming in. But the star of the show today is asset quality. That has done well even in the earnings in Q2 numbers also. If you see, we have seen a good jump coming in the asset quality. That ratio of the GNP ratio talking about, that's coming in at 1% That's why a thumbs up, the first thumbs up was given. Fourth one, return ratios, not much happening here as well, and that is why we could see that our overall rating also got impacted. This was the first set of numbers or parameters which we are talking about. Shareholding, not much there, 90% plus float is with the public, but the institutions, they have been reducing their stake, and that is why especially the DIs actually grown a concern for us as well. Street cred, not much returns coming in for the investors, be it the 1 year specific, 6 month, 3 month, you name it, and it's on the single digit growth side, and today itself also seeing a slight positive up move as well. Valuations very attractive, it's almost 50% discount coming into their Bloomberg peer average which I have taken, and the number stands at 0.7 times only on a trailing price to book ratio. And lastly, the outlook, that is where the street is bullish on, especially on their FY27 numbers, and chances are there that there might be an upgrade also coming in their overall outlook. But net the company needs to do a little bit of more homework. It's almost 3.5 out of 8. That's the final KYC rating which we are giving. So we have given you a 360-degree coverage for this untracked stock. We got the management for you and their important commentary as well. But that's it for today, and thank you very much for tuning into KYC only on NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything personal finance, whether it is your investments or your expenses or your tax planning, everything under the sun that relates to money. And today I'd like to talk to you about international investing, and specifically through the mutual fund route, as many avenues as there are available currently. You've seen a relative outperformance of several global markets compared with the Indian markets, particularly over the last 1 year. What does that mean for portfolios that have contained these schemes, and is that outperformance likely to continue? How should you adjust your portfolio strategy? Rishabh Desai, founder of Rupee with Rishabh Investment Services, joining me right now. Rishabh, thanks so much for taking the time. So, the way that I would like to do this conversation is split it into three parts. One, to talk about the year that has gone by or the recent time frame, maybe over the last 1 to 3 years, to talk about the relative performance of these international markets and India. The second, to talk about what the likely path forward is going to look like, particularly because a lot of these markets are trading near all-time highs. And third, how should investors adjust their strategy? So let's start with the first. You've looked at the data. What is the performance like?
Alex, first of all, thanks so much for having me on the show. Let's target the first bucket, as you correctly pointed out. How have these funds, or which all international funds have done well over the past 1 and 3 years? See, there are 3 funds which have done phenomenally well. One is the gold and gold mining offshore funds. Number two, the US market funds. And number three, the China region. So these three buckets have done phenomenally well over the past 1 and 3 years. Let me give some data to you and your viewers. Over the past 1 year, see, DSP World Gold Mining Fund has given close to 100% returns. This is 1 year absolute returns. If you see the Hang Seng Fund, which is the Mirai Asset Hang Seng Tech ETF, which is given around 55% returns. And if you actually somehow go to see the overall global metal scenario, which includes other metals like copper, palladium, silver, etc., which is beautifully managed by ICICI, that has delivered around 42% returns. So overall, if you go to see, also one more fund which I forgot to mention, which is the artificial intelligence, which is again focused on the US markets, it is delivered around 40% return. So if you go to see overall on a 1 year returns basis, these funds have delivered anywhere between 40% to 100% returns. On a 3 year returns basis, again on a CAGR basis, some of these funds, including gold, US and China region, have delivered anywhere between 32% to 50% CAGR returns. Now, in both of these periods, on 1 year and 3 years, see, Nifty has delivered minus 3.5% absolute returns, and on a 1 year basis, minus 3.5% returns, and on a 3 year basis, it has delivered 14.2% CAGR returns. So, on 1 and 3 year scenario, Nifty India has unfortunately underperformed, and global markets, including US, China, gold and gold mining companies, have actually outperformed.
Okay, so that's the scenario. Perhaps we can talk about why that is, Rishabh. In your opinion, is that because of certain aspects? For example, you have the tariff turmoil that India went through, and you've had foreign institutional investors selling to a large part. You had the broader markets coming off quite considerably at the start of the year. They did bounce back. But then earnings have been a little bit anemic. And you've had several reasons why, after running up for 3-4 years, there would be a period of consolidation. Is it that consolidation at play right now?
Absolutely, Alex. See, number one, India has underperformed mainly because FIIs have dramatically pulled out money. FIIs have shifted their trajectory towards the US economy. US economy has actually outperformed because a lot of FII money is flowing in the US. This is number one. Number two, gold and gold mining companies and metals have actually outperformed because there's too much of geopolitical tensions globally. Of course, as you correctly mentioned, that the US tariff also remains quite uncertain. President Trump, unfortunately, seems to be very unpredictable in terms of making clear-cut decisions. But he's very, very clear that he wants to uplift the US economy for sure, right? So, due to a lot of geopolitical tensions and uncertainty in the US tariffs, US has actually outperformed, and gold mining companies have done well. Last but not the least, the China region, which had been in the underperformance zone for many years, for 3-4 years at a stretch, has started to do well because a lot of foreign money has started to flow in the China, right? So I feel India has underperformed mainly because it's not that India is not performing well in terms of earnings. The earnings growth is quite strong. It's just we want more FII inflow so that the prices can be uplifted.
Okay, and by the way, the most recent signs are pointing to, at least if not considerable buying by foreign institutions, then the abatement of selling. Not to get into too many technical aspects, but if you watch the earlier shows during the day, you will get a sense of the fact that the index shorts, and that is derivatives for foreign institutions, have reduced quite considerably over the course of the last couple of weeks, and that means that there is less pressure than there was last month as well on the Indian equity markets. That is a good sign. But Rishabh, the question is, what does the next 1 year look like? Generally, the advice is that you should be a little bit fearful when others are greedy and greedy when others are fearful. And that has to do with relative valuations, right? So if you look at the outperformance of certain markets vis-a-vis India over the last 1 to 3 years, then should you not be cautious about your incremental investments into these markets?
Absolutely, Alex. You are so right and so very well put. Usually, playing contra works best, right? When valuations are expensive, when prices have peaked out in certain strategies or certain economies, I think that is the time one should be fearful of those strategies and those economies. And which economies which have not done that great, which have underperformed and have been under time correction and price correction for some time, which in this case is India, because India has actually seen a price correction early this year, and we are actually under a time correction over the past a year, 2 months or 3 months or so. I think this is the best time to invest in the Indian economy, because I truly feel that the best is yet to come for India. And over the next few years, I think US gold or silver or other metals may not do that well.
What you essentially is saying, I think, if you're back with us, is that India is the place to be over the next 1 to 3 years in particular, and you can double down on those investments. But having said that, let's talk about certain aspects of what is played out. Rushabh, I'm sure you've looked at the data, and if you look at, for example, the South Korean market, or you look at the Japanese market, you look at the US market, S&P 500, for example, everybody knows about that index. There are a few stocks that have led to the tremendous outperformance of the index as a whole. If I'm not mistaken, the top 5 constituents of the S&P 500 account for what, 30% or thereabouts of the benchmark. And so you have a few pockets of strength, and the question mark about whether or not, for example, an Nvidia, which has a 4 trillion plus market capitalization, which is comparable to the Indian equity market as a whole, the question is whether you would want to own the Indian market as opposed to Nvidia. You want to comment on that?
Alex, I truly believe that having some exposure in the US economy is absolutely very important. There are 2 specific reasons why. See, number one, as you correctly mentioned, that the market capitalization of each of these companies is as good as the entire stock market capitalization of the Indian stock market, right? And also these are very unique companies, having super strong earnings, having super strong global presence, and they are very good at innovating, and they are very good at what they do. Okay, see, in India, unfortunately, we are not an innovative country, right? We are still concentrating more on the manufacturing side. So I think having some exposure in the US economy in terms of due to its unique companies, due to its size, global presence, and most importantly, having some currency diversification is very important, because let's not forget, today dollar is the strongest currency globally, and I don't think it is going to weaken sometime soon. Okay, looking at the current scenario. So I feel having 10 to 20% of exposure in the US economy, but at the right price and at the right time, is very important.
Okay, so we've established that is the case. I'm curious about whether you feel the same about Chinese funds or certain other international funds as well, or when you say international investing, you're primarily talking about the US market and US based funds. How do you do that though? Because the avenues, Rushabh, because of that overarching limit having been breached for the industry, are not very wide. So where would you look at deploying if you are looking, and what are you advising your clients to do? 1, and 2, if you have an ongoing exposure, you said 10 to 20%, is that your overall international exposure at this point?
So I'll take the second part of your question, Alex. So 10 to 20% is out of your overall portfolio, right? So I feel around 80% should be in India, and 80 to 90% should be in India, and 10 to 20% should be, in the US economy. Now, there are 2 economies which I'm recommending to my clients. One is the US economy and the Greater China region. Now, the Greater China region consists of Taiwan, Hong Kong, and China. The reason why I'm not recommending other economies in the European region or the Japanese region is because, number one, they are very, very, very cyclical compared to even China. China is also very cyclical, but even if you compare it to China, many of these economies are way too cyclical. Growth is very much subdued in the European region and in the Japanese region as well. So I think targeting economies with high growth, which is the Greater China region, the Indian economy and the US economy, I think these are the three economies what I'm recommending at this point of time. Most importantly, right now, I'm not recommending any of my clients to invest in either offshore funds, is because many of these FOFs are investing in ETFs, right? And ETFs are trading at very high premium. The reason why they are trading at premium is that, mutual fund houses are unable to create fresh units because of the RBI restriction. So I feel that number one, valuations are expensive in the US economy, plus ETFs are trading at premium. And also, I think China is recovering quite well. But I think if you would have invested in China probably a year or two back, I think that would have been the right time. This is the right time to focus on the Indian economy itself. But again, at the right time and at the right place, at the right time and at the right price, investing either in China and US is something what I would recommend.
All right, Rishabh, thanks as always for taking the time. Absolute pleasure speaking with you and insightful conversation.
Thank you so much, Alex.
All right, so there you go. The takeaway for me is that you should hold your horses. If you are thinking of incremental investment in international funds, there is a lot of interest, and because the options are limited, there is a bit of a dislocation in the prices that has taken place. So you'll get your opportunities down the line. Perhaps, according to Rishabh, is a good idea to double down on your investments right here in India. Let's talk about another topic, and this has to do with any loans that you might have that are outstanding right now. And what I was curious about is that with the 100 basis points cut that you've seen in the policy rate, that is based on what the RBI has done, the Reserve Bank of India with its monetary policy, has that trickled through to you? And should you be prepaying your loans when your loans have gotten cheaper? Abhishek Kumar, who is the founder and he's a founder of Sahaj Money as well as SEBI registered investment advisor. Abhishek, thanks so much for taking the time, and pleasure having you on the program. So the first question is, how do you treat different types of loans? Because they can't all be treated the same. And here I'm talking about home loans, I'm talking about car loans, your white good loans, which are usually swiped with your credit card, and credit card debt.
First of all, thanks for having me, Alex, in this show, and I look forward to talking on this. So as you rightly said, not all loans are equal, and depending upon the kind of loan type it is, whether it's a secured loan or an unsecured loan, the interest rate differs, primarily because the risk of default also is different on different kind of loans. An additional factor is that when a loan is tied up to a depreciating asset like that of a car as such, it's also on the higher side, because there is a depreciation of assets which impacts the overall interest that the particular asset would come on. So in that case, comparatively, credit card and white good loans are high interest rate loans, followed by education and auto loan. Finally, home loans are comparatively low interest rate loan, and that is what the kind of ladder structure which in terms of the loan rate of interest are currently aligned. So we will always suggest to focus on paying high interest loan first, particularly credit card loans, as you know that they often charge, more than 20% or more, as this saves a lot of money over a period of time. And when it comes to low interest rate loans like mortgages or education loan, with rates around 8%, you can maintain minimum payments and still invest the balance surplus elsewhere to generate better returns. Compared to that, auto loans and white good loans fall in somewhere in the middle of it, and should be assessed based on the specific interest rate. With anything about 10% should warrant aggressive repayment. This approach is primarily called an avalanche method, which mathematically minimizes the total interest payment across all debt portfolio.
That's an interesting thing, right? So is it possible for you to elucidate this if you're talking about an ideal situation? Because I've also heard an argument, Abhishek, in the case of longer loans in particular, that if you are to have a constant EMI, and obviously in that time frame your earning potential and the amount of money that you earn per month should go up. It does go up in most cases, and so therefore you can technically pay more than you are doing in your third and fourth year. But should you invest that excess amount instead of plowing it into your loan, because you could technically, in an equity product, for example, over 5 years, get between 12 and 14% on a conservative basis?
Right. Oh, that is a good argument to have. The important factor is that in any long-term loan, Alex, it is very important that if you prepay the loan in initial, say, second to 5 years, it impacts your overall interest payment over the loan tenure. But because, as you rightly said, people are in their career progression and their income probably would also go over a period of time. So that brings a dilemma whether to try to prepay the loan in the early years or to continue the EMI and then invest the balance in high growth products like you mentioned about equity. So we always have this dilemma, and the way to go about it is to have a mix of both. Try to use your, let's say, irregular payout, like if you receive bonuses or say have kind of a, income coming from different sources at irregular interval. You can use that to prepay the loan to the extent possible, and the balance surplus you can always invest in high growth product, especially when your loan tenure is of say 10 or 20 odd years. That kind of period gives you the flexibility that you can even out the fluctuation which comes with market linked product like equity. So I would suggest, follow the middle path, and that would probably give you both the flexibility as well as, saving interest over a period of time.
The avalanche method, in what scenarios is this beneficial? Would it be beneficial in a home loan scenario? Would it be beneficial in a car loan scenario? Can you elucidate it with a few examples?
Sure. So, generally, as I spoke about, that depreciating asset like that of a car comes with a higher interest rate loan. So compared to that of an, say, home loan, we always advise to start paying the high interest loan, because that way you'll be able to save interest over a period of time much more than, let's say, what you can do with a, in this case, a home loan. So start with high interest rate loan. All in all, I would not even say, if that is the case, if you're in bad debts like credit card, you should start from that, because those are very outrageous kind of interest rate that is being charged. So start with those loans to begin with, and then go down the list and address loans like we just spoke about auto loans and such, and then finally try to address let's say something like a home loan which is over a period of 20-30 odd years. So that kind of approach will probably give you flexibility to manage the payments.
How does it work though? If you were to explain how this avalanche, and it sounds incredible, right? So I'm sure that pretty much everybody has seen an avalanche. It's essentially what happens in snow, where just a pebble can cause the entire mountainside to go down. But how does this work if you were to actually elucidate it?
Yeah, so the idea is that because high interest rate loans would lead to, if you continue them for a longer period of time, it kind of increases the overall payout throughout the loan tenure. So if you start addressing them first, your overall interest payment throughout the loan tenure on an aggregate basis goes down. So let's say if you compare the interest that you would have paid if you had continued those loans over the same loan tenure compared to trying to prepay the high interest rate loan early on, that would help in saving that overall interest that you would have paid during the same period. So that is how the total interest payment kind of reduces, and that leads to more surplus down the line for you.
That is the avalanche. Okay, I understand that. But then, do you do this on a monthly basis, or do you do this on a quarterly basis? Do you accumulate a certain amount of money? Do you invest the surplus and then at strategic moments remove? And also for a mortgage loan, of course, the first 5 years, 7 years are the golden years, where you have a large part of your EMI that goes towards the interest payment. And so removing that principal is significantly more beneficial.
Indeed, that's the right approach, as you rightly said. So start with trying to pay off these loans as early as possible. As I said, if you have irregular income coming in, let's say some bonuses, quarterly bonuses or half yearly or annual bonuses, those are the kind of let's say surpluses which are good to use to prepay the loans, because you're not impacting your overall savings or the let's say investment that you're doing. You're not impacting them while creating opportunity to prepay the loan, through your irregular income, that will help you in reducing the overall interest payment, because as I said, and you also spoke about, the early years in a loan tenure is quite important. The more aggressively you try to prepay the loan in that period, it leads to a lot of money saving over a period of the loan tenure. Perhaps you can use it to, not reduce your EMI, but you can use it to reduce your overall loan tenure, and that will help you in kind of becoming debt free quite early on in your life.
So there is no one single rule. Therefore, is what I'm getting from it. You shouldn't curtail too much of your savings for the future, but as and when you get a surplus that you were not anticipating or something that does not fit into your regular use, you can use that to prepay. Abhishek, right. In a scenario where the Reserve Bank of India has cut interest rates by 100 basis points, it could cut by another 50 basis points if the expectations are going to pan out. But the question is, if you have the option of reducing your EMI or reducing your tenor, which should you take? Which is more beneficial for you? Should you reduce your EMI, increase your savings, or reduce your tenor and keep the EMI the same?
Right. So as you rightly said, it is quite personal in that regard. So to give an example, when you should choose one over other. So if you're finding your monthly cash flows a kind of a constraint that you're not able to save or balance your budget, then perhaps on a temporary basis, you can try reduce your EMI so that it leaves some money on the table to manage those kind of volatile expenses. Whereas if you're in a very comfortable position, you can manage your EMI as well. I would suggest to try and reduce the tenure, because that will kind of give you an option to reduce your overall loan tenure, and then become debt free as early on as possible. So depends, contextualize and then take an option of that.
Yeah, and you would be spending far less on your interest payment if you are to reduce your tenor. So if you can afford it, always that might just be the best option. And finally, Abhishek, I ask this question quite often, but I think it bears repeating. In an age where everything is easily available on credit, how much of your monthly take home should go towards EMIs?
In that regard, again, it's quite personal in that sense, depend upon your cash flow situation and such. But as a kind of a thumb rule, good to have around less than 30% of your overall income going towards EMI payment. That will give you comfort in terms of managing your other expenses, because there will be other expenses plus saving required. So, almost a thumb rule of 1/3 of your overall income going towards EMI is a good spot to be. And at a higher level, it can go up to say 40% odd, but don't go beyond that is what my advice would be.
Okay.
Especially don't take too much of debt for depreciating assets, because that is kind of, it loses the value immediately, and you end up spending a lot of money on the interest rate payment. So try to pay for those loans using your own savings. So the idea should be that you should stick to these kind of thumb rules and you'll do reasonably well.
Speaking of debt that you shouldn't take, in your opinion, should people take leverage to invest money?
It cuts both ways, Alex, and you are better placed than me in answering that from your experience. So, leverage is something that, if it goes your way, your returns are compounded. But if it doesn't go your way, like you face a situation where there is a market downturn and you're in a position to lose your job or income, it leads to drastic stress situation as well. So the idea is to not to get into that. And try to save money on a regular basis instead of using leverage to compound your return. Especially if you're not in a day-to-day basis, you're able to manage the volatility. If you're a long-term investor, continue to stick to regular investment and avoid leverage is what I'll advise.
It's great advice, and thanks so much, Abhishek, for taking the time. Pleasure speaking with you.
Thanks for having me, Alex, and look forward to speaking to you soon.
Absolutely. All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Let us know what you'd like to hear on this program. We're open to suggestions, and do stay tuned. This is NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है NDTV
Joining us in our studio today, Mihir Bora, CIO of Trust Mutual Fund. Mihir, great to have you back in the studio after a while. And
my pleasure.
Yeah, and I hope you've had a great festive season, etc. And it's been good. Definitely a good mood as far as markets are concerned. And some of the worries seem to have receded. Is this a delayed reaction to the consumption boom post GST cuts that we're seeing right now?
I won't say delayed because markets have held up actually quite well in spite of all the uncertainties regarding the trade deal for the last many months. And of course the government's bazooka, two bazookas on the budget consumption as well as, tax reduction as well as GST reduction definitely helped the business environment, I say. So I think it's now well accepted in the market that the December quarter numbers, at least in the consumption stocks, etc., should be good, right? So I think a quarter though, we can say nikal gaya, as they say, you know. But I think the next question for the market will be whether banking credit picks up to the extent that's required, because that's the one, sore spot in the market, that credit growth is not that great. And if the economy has to grow at 6.5–7%, then this is not the kind of credit growth that one wants to see. It's not sustainable. So I think next leg of the cycle will come from better business investments, private sector capex, as well as credit growth, I would say.
Having said that, the quarterly numbers so far have been better than expectations, and that's given some boost as well, isn't it?
Absolutely. As I said, there was a build-up to the consumption theme as the busy season came in, and the GST bazooka did help in that extra boost on consumption. So as of now, the business environment is quite good. I think the retail environment is good. But it needs to be sustained. The question always has been whether this consumption boom will sustain, which we have seen, but in patches, not on a consistent basis.
I want to ask you about the banking pack and specifically on large private sector banks, because I look at your FlexiCap fund and I have the fact sheet from the previous month. Of course, I do not know what you've done this month, but I see the top holdings are ICICI Bank, HDFC Bank. The question that I have to ask you is what you're penciling in on credit right now, because ICICI Bank, you've seen that transition over the course of the last decade or so, where they used to be corporate focused and they became private focused, retail focused. What is the implication of this consumption boom? You've not seen it in the numbers so far. So what are you penciling in?
So essentially, as far as banking credit is concerned, retail has done quite well. Consistently the private sector banks have focused on retail credit. So whether it's unsecured loans or loan against shares, etc. But most importantly, the mortgage piece. So banks have been the most aggressive there, and with good reason, good controls, risk controls, granular data, etc. Plus the liability franchise that they get when you get retail clients. So that private sector has done extremely well. In fact, probably too well. So well that they're defocused on the corporate side. But now we do see that some of the private sector banks are going aggressively into the MSME space where the yields are still better, because large corporates don't tend to don't let banks make too much money. The yields are too low on the large corporate side. So MSME, retail, those would be the growth drivers, and I want to see indications of growth happening on the MSME and retail space, which should continue. But more importantly, even corporate capex has to come back. So because the government is talking about a manufacturing boom, the government is spending a lot on infrastructure backed by government spending, but also expecting private sector participation. That's the kind of credit that we want to see growth in.
Okay, you mentioned that the markets have held up well, and indeed amidst that entire patch of selling by foreign institutions, that has been the case. I'm not tom-tomming domestic institutions buying, because ultimately when somebody sells, somebody has to buy. But having said that, are you worried that valuations may not be, as a result of the fact that there has been a base, attractive enough to deploy significant capital that keeps coming in on a monthly basis? The pockets that have that relative valuation comfort have diminished quite considerably?
I won't say so. I'd say the opportunities are the same, or maybe better than last year. Okay. Because we've seen the markets do pretty much nothing for almost 12 months now, right?
So time-wise consolidation has happened.
Always been a time consolidation, and profits have grown in the meantime. Whether it's 5% or 15%, profits have grown. So the valuation euphoria, I think, that we were talking about last year is not as sharp as as that this year. So we have some valuation comfort. We talked about banks. Banks have done not much, not only for the last 12 months. It's almost for 18 to 24 months. Yeah. The banking sector has underperformed, and for various reasons. We can talk about it later. But the fact is that the banking stocks are the largest component of most of the broad indices. Yeah. And that chunk is actually quite reasonably valued, and there's no risk there because balance sheets are clean, NPA issues, etc. It's only about growth and margins. So I think the valuation comfort is far better now compared to last year.
So we've reported this morning, Mihir, that the government is mulling increasing the FDI and PSU banks from 20 to 49%, but they're also mulling increasing the voting rights for private sector banks as well. Do you see this as a possible reset for PSU banks? Does it pique your interest right now?
Absolutely. I think it's a low probability event because it's a dramatic departure from the traditional thinking.
At this point?
There are a lot of talk about it. If it happens, it'll be a huge thing, I would say.
No, so 1 minute. Do you think it's a low probability because it might turn out to be a political issue as well?
It's always been, right? Touching public sector banks is a sensitive issue.
Yeah, but from what
if it happens, it's a huge thing.
From what we're hearing, ownership will still remain with the Indian government.
Of course, but even a little bit of mindset change, I think, is a good delta, I would say.
So if that does come through, what would be the real area of traction? Would it be the largest PSU banks, or maybe some hidden gems out there?
See, if the re-rating happens, it will be across the board. we don't know what sequencing the government will think about, whether they'll demo it with a smaller bank first and then roll it out to the entire banking system. We don't know that, but I think it's a step in the right direction if it happens.
Would you say that for the banks that have relatively lower government ownership, there are some that have significant, but it's easier to do that in the ones that have lower ownership, so therefore some of the more prominent...
I'd say it's the other way around.
The other way around.
You might want to do it in the extremely concentrated ownership, where the floating stock is lower.
Interesting. Okay.
Yeah. Just wondering, we started the conversation saying that the US-India trade deal has not come through. In fact, maybe a bit of FOMO because now there's a deal with China, Japan, Taiwan, I think Thailand, everyone, and we're still, negotiating ours. Do you think that this is something that is back of mind now for markets, or the next big trigger which could really change things, even as we're struggling around this 26,000 mark on the Nifty?
It is a trigger that the market needs, I would say, because we did talk about the fact that India has not done much in the last 12 months, and not only in absolute terms, but in relative terms, it's even worse, because the US markets have done extremely well. So India has been a laggard now for a good 12 to 15 months. Of course, before that, almost for 4 years, we were the best performing market. So some kind of consolidation was anyway necessary. But the fact is that we have underperformed, and there is a bit of a catch-up that is required. And I think the trade deal will be a trigger for that. I don't think we can afford to not have a trade deal. So we are not talking about no deal at all. It will happen maybe in 2 weeks, maybe in a few more weeks. I don't know. But the fact is that it will happen, and that's a trigger that the market requires, because you can't have FIs selling every day, right?
That is reversing as well. That trend is reversing as well.
The selling has reduced, but it's not a huge inflow yet.
So covering is taking place.
So while the domestic institutions have supported the market brilliantly, the retail investor sentiment is still strong, but you can't have a situation where FIs are sellers continuously for months together.
Okay, I see a few interesting names in your FlexiCap fund. I keep looking at that because that for me is an indicator of the strategy that you play with. It's your blank canvas fund, right? And so therefore I see names like Eternal, I see names like, for example, Bajaj Finance, I see names like Maruti Suzuki, all of that aimed at the consumption theme. So you've deployed already. Are you scouting for more opportunities in that space? Will you double down?
Certainly. See, consumption is a secular theme for us in any case, and we are growth investors. So what we have seen is that within consumption, the premium item consumption will be faster.
Okay.
Growth will be faster, right? Because of the rising income levels, demographic changes, taste shifts, and some of the names that you talked about are more of convenience and new business models.
Sure.
So automatically, consumption itself is a strong theme, and within that, if there's a disruptive new business model with a large addressable target market, then there is a long runway of growth, and those are the kind of stocks we are looking at, whether it's in financial services, again catering to consumption, or directly catering to consumer demand. We are looking either at large TAMs, addressable markets, or we are looking at premium consumption. So those are the themes we are playing in consumption.
You say financial services, and it is indeed the highest ownership that you have in that fund, but there's so much to talk about within the scheme. You've spoken about private sector banks, public sector banks as well, but I want to splice that further, and I want to talk about maybe a capital market plays, because there was so much excitement, optimism about it about a year back, and then some elements of that have fallen off the wagon. How do you approach the space now?
So capital markets are a secular theme for us, and it also it fits in with the premium consumption play. Not premium, but rising income levels, rising savings. So financialization of savings is the other theme that we are talking about, and capital markets fits in perfectly with that. And there are now so many sub-segments within capital markets. You have brokerage, AMCs, insurance, depositories, exchanges, things that were not even, we never thought that would get listed, R&D agents, etc. So the point is that it's a wide theme, but it does tend to be a little pro-cyclical. So when the market does well, that theme has a higher beta.
So
on the
how
upside.
Are you playing it?
So we have exposure, I would say the more consistent exposures that we have had in the portfolio are in the AMC space, in the insurance space, in some of the, I would say, R&D agent space, and the depository space, because that is a little less cyclical. It more depends on the number of investors coming into the system.
Onboarding.
Yeah. The other ones like brokerages tend to be a little more cyclical for us. So we are kind of in and out in some of those themes. But in general, I think it's a higher growth play. Only thing is that capital markets plays hugely outperformed the banking part over the last couple of years, because banks anyway were a lower growth segment. But now I think the heavy lifting that was done by the capital market and the other one, which is the NBFCs. So within financial services, most of the heavy lifting so far has been done by the NBFC and the capital market.
So you think that reset?
So now the reset has to come. The next leg has to come from the
banks.
I
think capital markets also valuations now need to be re-looked at, and after all the moves on the derivative segment, etc. But I just want to come back on the consumption theme with a slightly different question pertaining to the primary markets, because you have a couple of consumption-focused and one tech-led consumption-focused IPO that is opening up this week. Already the questions of valuations, etc. Are you seeing this as potentially a good opportunity for investors, or is this something that they should be cautious about?
See, one should, we always look at IPOs like we do secondary market stocks. It's ultimately, what do? You look at fundamentals, management, valuations, right? So it always has to be a combination of fundamentals and valuations. It may be a great stock or a great company, but not a great stock because the valuations are too expensive.
Yeah, but for tech-led or platform-led companies, there's always the argument that valuations work differently in this case.
No, they do actually.
They do? You agree?
Because, we have talked about, our philosophy, which is terminal value investing. And terminal value investing looks at the long-term growth prospects, and there the biggest component is the target addressable markets, and when you're looking at some stocks which are starting from a very low base, using technology to onboard customers in a cheap way for a long period of time, whether it's for delivery of goods or services, the TAM can be radically redefined. So I think in some of the cases, markets may tend to underestimate the TAM.
Okay, so in that case, on consumption, would you still favor your platform companies even now, or would you look at staples also seeing a bit of a reset?
No, as I said, our strong bias is towards terminal growth rates, which is very well addressed by these platform companies. So within the portfolio, our bias is definitely towards new business models, towards companies which have a large addressable market, which have a long runway of growth, because you're starting off with a new business model in a new space. So our FMCG stocks are, in my view, a mature segment.
Yeah.
The volume growth will not be double digit for a long period of time.
We did a piece today on the whole reset in management, a lot of new blood coming in FMCG companies.
And the challenges that might
but some of them also coming in from a background of platform companies and tech push. I wonder if there will be a change there in strategy and if there is more to give, or is just the nature of the beast that you're going to have slow but steady growth.
Yeah, but exactly. So unless there is some dramatic shift in consumption patterns, how do you sell more toothpaste, right? How do you sell more detergents?
Yeah.
Because they are quite penetrated. So most of the growth then comes from value by uptrading, etc.
Premiumization will play, and that's what you said at the start, where you expect that these premiumization plays will come through. Yeah. Speaking on a day when we're looking at the reaction to Mazagon Dock shipbuilders, you saw Zen Technologies yesterday, this entire defense pack, and I'm looking at your portfolio, and you have a sprinkling of defense companies here as well. What is the thesis there, and are you okay with, or as a fund manager and as a selector of these stocks, how do you look at the earnings picture? Do you look at the order book and the potential there? For example, a Mazagon Dock, you're talking about the potential from going to 25,000 order book to 1+ lakh crore order book if certain things pan out.
Sure.
But there could be choppiness in revenues. There could be a couple of quarters where you have zero or a single-digit growth. Certainly. So how do you look at it?
You're absolutely right. These are chunky order books and chunky execution plays. So there's no point in looking at these on a quarter-on-quarter basis. But certainly we would look at it on a year-on-year basis. So as long as the order book accretion is good and as per plan on a year-on-year basis, we would be okay with that. We are looking at the defense play again as a secular, growth play, because this is the first time that we are insisting on local production
indigenization
and more participation from the private sector.
I just want to expand that question on policy push-backed plays. So there's, of course, defense, which is a known story. Shipping, 70,000 crore rupees is what's earmarked as a push for us, for the sector. ECMS has happened yesterday, where there is about, 5,000 crores worth of portion, more projects coming in, PLI scheme, etc. Is this now a continuing theme?
Absolutely. I think the Atmanirbhar mindset has been there for a while.
Yeah, that's one side effect of this prolonged trade deal, perhaps.
So Atmanirbhar has been there for a while in any case.
Yeah.
But this has only accelerated the whole debate, and I think galvanized. I think we work best in a crisis.
Yeah. When push comes to shove, the Indian jugaad and Indian will always comes through.
Absolutely.
No. So having said that, being more specific, where do you see those pockets of growth actually panning out? For example, okay, India wants to make semiconductors. It's going to be a while before we can do that. India wants to mine rare earth. It's going to be a while before we can do that. India wants to make its own APIs. It's going to be a while. So where are you seeing those pockets of growth actually, transitioning and turning into opportunity?
In the manufacturing space, no?
Yeah. Actually,
with the broader bucket of PLI, I would say, and manufacturing,
So actually, it's no longer a point about the future. It's happening as we speak. Companies have already raised funds. They are already digging, foundations into the ground in semiconductors, in the, electronic assembly space, in the, the whole Apple ecosystem. It's happening as we speak. It's no longer a question of future or 1 year down the line, 2 years down the line. 2-3 years down the line, you'll have actually the production coming out.
So now is the time to place that position.
Absolutely. And we have a sprinkling of stocks in all these segments. We have companies which have invested in semiconductor manufacturing. Electronic assembly has been there for a while in any case. Defense has been there for a while. These are all these domestic PLI as well as Atmanirbharta plays, and it's a secular theme. I think there is no choice.
Interesting. Okay. I think it's been a fascinating conversation as always. Thank you so much for joining us in studio, and look forward to the next visit.
Absolutely, my pleasure.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out.
Mark Mobius, co-founder Mobius Capital Partners, back with us. Mark, so with everything said and done, Mark, the key question right now is, What we're talking about is Washington Post's allegations, where Government of India has pressurized LIC to invest up to $3.9 billion in Adani Group. And this includes nearly $568 million done in the month of May of 2025 itself. Now, LIC has come ahead and refuted all of these allegations. What would you have to say to this?
Well, I think the whole story of Adani has been overblown. I think they're doing good work. It is true, being a family-oriented organization, there's no question there'll be cross-shareholdings, that sort of thing. But generally speaking, I think the company should get the support because they're so important to the infrastructure of India, in addition to other companies, of course. But I think it's fair for LIC to invest in Adani. It will help them as long as they keep an eye on the balance sheet and on the profit and loss statements and the audited statements, then it should be okay.
You're right to say that it's another hit job which has actually fallen flat, because a lot of investors which are there in Adani's bond offerings, apart from an LIC, you have marquee names like ICICI Prudential, Nippon Mutual Funds, HDFC, NIF Infra, a lot of them. So would you categorically say this, that it is another hit job which is actually falling flat?
Yes, I think so. And I think, it's important to remember an investment in Adani is really an investment in India. Now, maybe some people would say that's going too far. When you invest in Tata or Reliance, you're also investing in India. But in the case of Adani, it's very important because of the infrastructure work they're doing. So I think it makes sense for them to keep on doing what they're doing. And those companies that are investing in Adani are doing fine.
Mark, we're speaking at a time when, at least right now, you've had a dissipation of selling in the Indian equity markets by foreign institutions. That's what the latest data is pointing to. You've seen index shorts been reduced over the course of a couple of weeks from 94% to now 74%. And that is why you've seen a little bit of a pullback in the benchmark as well, in the Nifty 50, and the large counters are seeing a little bit of buying. Once again, banks and IT are being preferred. I'm just wondering what your opinion on India is at this juncture, because there has clearly been an underperformance versus other major markets in the world.
That's true. There has been underperformance. And part of the reason is that China has been doing quite well. And you've seen some investors switch from India to China. But I think that's very short-lived, because at the end of the day, if you look at the numbers, India with the GDP growth of 6%, which is quite amazing, you see inflation now coming to the lowest levels it's been in a long, long time. So there are a lot of very positive signals. And of course, I believe they're going to come to some accommodation with the Trump administration. They already have seen some cutback in purchases of oil from Russia. So all these signals, I think, mean there'll be a good recovery in the Indian market. So we're betting on India going forward. The problem, of course, is getting access to India, because we're having a lot of trouble with some of our funds to get permission to invest in India, because Deutsche Bank, our local custodian, is having trouble with the paperwork and all the rest that has to go into that. But otherwise, yes, definitely India will be a place that we want to focus on.
Pretty interesting, Mark. India would be the place where the entire action takes place. But global commodity cycles also, we are seeing there is a kind of a technical pullback happening when it comes to gold and silver as well. Are we looking at a bigger upcycle from these current levels as well when it comes to gold and silver? What would be your views on that?
Yeah, we've seen a big pullback in gold, about 10% pullback. I think that's temporary. We're still betting on gold. We think gold will still be something that we got to have in our portfolios. We still hold gold, and I think there will be recovery in gold as well, of course, with silver following the gold.
Mark, one question I have. Last time I spoke to you, you told me Sensex at 1 lakh in the next 1 year. Do you think it could come in earlier, taking the way markets are right now? You're seeing an upcycle. There is some bit of a pause, but with all the factors which are aligning, do you think the 1 lakh mark could come in earlier?
Yes, it could be, particularly when you see the markets globally moving the way they are. And of course, if you keep an eye on the S&P in the US, it's going from strength to strength. If this continues, and if the political news keeps on gaining ground and being positive, with Trump traveling all over Asia, all these signals will be good for the markets. And yes, it's quite possible that the Sensex could go a lot higher than they are now.
Now, you said that you're looking at India very closely, Mark. So therefore, the question arises, and a lot of our viewers will be paying attention to this as well. Where are you looking to deploy? And if there are individual names that you're studying right now or have invested in, we'd love to hear them.
Well, I can't give you individual names because we're in the process of investing, but I can say that the consumer area is particularly interesting in India because you've got a huge consumer market. Per capita incomes are going up. With GDP growth the way you're looking at it, it's going to be very, very interesting to be in the consumer space. So that would be one area. The other area, which I mentioned before, is consumer hardware. In addition to consumables, hardware will be good, and electronics hardware.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank.
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Good
समझो जरा भी प्यास जिसके हम ना हो
जान रहे दिल ये तो जान दी है तू मेरे तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है
और रहमान
सोनू निगम के लिए जोरदार तालियां
The NDTV Profit has come a long way since it was relaunched.
Good evening, welcome to NDTV Profit. I'm Vikram Boza and this is the show that we call The Big Question. The government is reportedly considering this major shift in India's banking policy. It is a shift that could open the doors to a much greater foreign participation in state-run banks. So according to media reports so far, the government is weighing a proposal to raise the foreign direct investment, the FDI cap in public sector banks from the current 20%, they want to pull it up to as high as 49%. It's a move that could attract much needed overseas capital into the Indian financial system. The government's take, we are told, is going to continue to remain above 51%. But this policy tweak could be a rather significant step. It could make the PSU banking ecosystem that much more modern, and it could bring it closer to private sector norms where FDI is already allowed up to 74%. So the proposal is being seen as part of a broader reform push to strengthen the banking sector. The idea, of course, is to boost credit flow, to draw in global investors, and all of this happening at a time, mind you, when there is renewed foreign interest in India's financial story. And hence the big question tonight, and that is the real arc of the debate. What is the possibility that foreign capital coming into the Indian public banking system will make the entire ecosystem that much more competitive? And to discuss that, let's bring in our panel. And we have a good panel to start with. Of course, we'll be joined by more panelists as we go along. But right now, we have the General Secretary of the All India Bank Association, Mr. Venkatachalam, is joining us. And indeed, in a bit, of course, we'll have other guests. Besides, we have Karan Gupta, the Director and Head of Financial Institutions of India Ratings and Research. It's great to have you both, gentlemen. Let me begin by asking you, Mr. Venkatachalam, and of course, we do have Mr. Purvar with us as well, the former chairman of the State Bank of India. Great to have you with us. Of course, Mr. Purvar is going to join us in a moment, but let me ask you, Mr. Karan Gupta, in terms of what you've heard so far, and of course, this is all source-based information, but it is going to, the hope is that this will radically change the way the public banking system has worked so far. What do you think is driving it at this stage, at least? What do you think is driving the government's rationale to bring in more FDI in public sector units?
Good evening and thanks for the question. This, if you have to look at it, is in a series of steps that the government has taken over the years to improve the public sector banking ecosystem. If you think about it, the last round of amalgamations, where a large number of public sector banks got amalgamated into stronger and limited number of public sector banks now. Along with that, you also have the announcement on the privatization of a couple of public sector banks and IDBI as well, which is on its way to get privatized. So all of these banks, and with the stated intent that, over the next few years, the government plans or targets to have few number of large and stronger public sector banks, this could be a step in that very direction.
So one is, of course, this is going to make a big push towards the kind of levels that we've seen the private sector banks. Now, if that has to change, we're going to see the government's push towards this FDI attraction that much more effective. Let's bring in NDTV Profit's banking editor and Mumbai Bureau Chief Vishwanath Nair as well to decode this rationale behind this likely move. Vishwanath, You tell us, why does the government want to boost foreign capital and PSU banks right now? What have you picked up from sources about the rationale behind this likely move?
The government seems to be of the view that a review of the FDI cap on public sector banks would be essential. Of course, this is part of what sources are telling us, that a proposal has been circulated amongst the highest officers of the government, and a discussion is ongoing whether the FDI cap on public sector banks should need to be raised from 20% currently to 49%. This is, of course, keeping in mind that the government will continue to hold the majority stake, that is at least 51% in a public sector bank in India. Now, according to what sources are telling NDTV Profit, this entire conversation is taking place under the ambit of growing banks rapidly and making more large and highly competitive banks in India compared to where they are on a global scale. And to achieve this, of course, you will need the domestic banks to start raising that foreign capital, and that money can be used to facilitate that kind of growth. Separately, what we also learn from sources is that this is coming from the feedback that the government has received in recent roadshows, that investors from countries like North America, you've got Japan, and you've got the Middle East, all of these different geographies, investors are very keen to enter the Indian banking space, and that is why they are seeking a review of the cap on FDI. Apart from this, the government is also mulling a review of the 26% voting right cap that currently exists on Indian banks, specifically Indian private banks. Currently, no other listed company in India needs to follow this 26% voting right cap. Irrespective of where the foreign shareholder holds their stake in the bank, their voting rights will be limited to 26%. And that becomes a contentious point or contentious issue for these foreign investors. And that's why the government is looking at reviewing this limit.
So you've pointed out several reasons, Vishy, and of course we've got our panel of experts to decode that. But there are these pros towards which the government is working, and let me take that across to Mr. Venkatachalam. You know, that's the government side, and you've heard what your co-panelist, Karan Gupta, is saying as well. In your opinion, because you represent bank employees, how is this move being seen? Is it a threat to you? Is there a chance over here that we will become more professional, more efficient, our banking system, PSU banks in particular, with the catch-up they have to do in terms of their competitiveness with private banks? Do you think this could take it a notch up? How do you see it?
See, the point is, why should we compare the private banks and the public sector bank? Public sector bank, they have their own niche, they have their own scope, they have their own potential, and they have a task. That's completely different. There is a social orientation. Why banks are nationalized? Because of a social requirement. And should they have a separate stream, private bank, they are doing something. But they are into their own game of profit. But here we have a social responsibility. And so there'll be a clash of objectives. So this move is not a proper, move from the government of India. We would consider as a retrograde move. This should not be done. They can have their own. If foreign people want to come, they can come and have their private bank business. They can do that. They have very small space. They can expand. But why they want to poke their nose into public sector banks? How does it help? Our own banks are efficient. There is no example in the entire world the way our public sector banks have expanded, proliferated, serving the rural areas with huge number of 1 lakh branches. And it's a big thing that they are doing. And in technology, etc., they are no less efficient than anybody. So I don't think this is required at all. And if the government is trying to do, that means there is some pressure, etc., or they want to change their policy. But it will be a big disservice to public sector banking in the country. And
this
of course,
banking reforms.
Bank employees association will be opposing that naturally.
You're saying you are opposing this, and you're saying that this is going to be a retrograde move. You don't see this as part of the ongoing banking reforms, Mr. Venkatachalam.
No, bank reforms are required, I understand. See, economy has to grow, private people can play a role. But I am only talking in relevance to or in the context of the role and objective of the public sector banks. Public sector banks should be strengthened, they must be further expanded, and they must be able to play a big role.
And you think that can't happen with more foreign capital?
No, not necessary. Government can do that. That's not a problem at all. Public sector banks are quite okay.
But the government still wants to hold majority stake, sir.
No, it's not the majority minority. What is their role? What is the role of the foreign capital in public sector bank? Why they are coming? Unless there is some interest in them, why they want to come? This is a different game. Private banking is different, public sector bank is different game.
So that one aspect, Karan Gupta, perhaps you could weigh in on this. Mr. Venkatachalam is explaining to us the reasons why he thinks this is not a good move, and topmost reason is that public sector banks have a social responsibility. It's about deeper penetration of the banking ecosystem in rural India. It's to open that many more branches. Of course, with that, we've had more NPA issues as well on PSU banks in the past, which of course now has been corrected. But also in terms of equity performance, when you look at what the public sector banks have done, they had been laggards. So we've had that kind of entire spell. Now, if that social responsibility is likely to take a backseat with the infusion of more foreign capital, is that going to be seen as a drawback to the government's motive to try and get in that much more foreign investment in India's public sector banks?
To my understanding, that necessarily need not be the case. We still have the largest public sector bank, which is SBI, and therein the government holding is way below what we see in the other banks, right? We are talking about a 55-56% holding, and that doesn't prevent SBI to continue with the social motive or continue on the penetration story to reach out and increase the banking practices in India.
No, fair enough. I mean, this is going to be open to a lot of debate, and Dr. Dipali Pant Joshi is joining us as well. She's a thought leader, and of course, she's been the former executive director of the RBI. Dr. Dipali Pant Joshi, great to have you with us as well. You tell us, what happens to social and priority lending? Could foreign investors push banks to focus only on profits? Is that going to change the entire dynamic, the entire model, the business model of public sector banks?
Well, let me first give you a quick SWOT analysis.
Sure.
Let's take the word etc. first. First, of course, there will be greater efficiency. Then there will be better technology, and C stands for better corporate governance. So this is a strength, because when you have capital, you are able, and that's the opportunity also, you are able to build mainframe technology, use AI more efficiently, compete in the digital world. Now we come to the weakness of the proposal. The weakness of the proposal is that when you are linked to an entity which is unknown, larger than yourself, you cannot calibrate it to your needs. You very rightly asked me whether priority sector lending will be affected. Well, I have an apprehension that it certainly might be. But the might I say because unlike the general supposition that it is poor lending, priority sector lending is a huge market, and microfinance also is a huge market. And the reason the foreign banks want to come to India, the reason foreign capital wants to flow to India is the huge Indian middle class and the India story. I mean, India is the only country which is going at a very fast clip of more than 6%. And India has a lot of inherent strengths. Now, the weakness for us is that this foreign portfolio investment, if it does not get the return on capital employed, which we call ROCE in banking technology, will leave. And if it leaves, it's a vacuum. The second thing is that it is also governed by the regulations of the countries in which it operates, while we would like it to be governed regulatorily by the regulations of our country. I will give you a very simple example. If the Federal Reserve tomorrow raises the interest rates, and if the Reserve Bank of India, in its formulation of monetary policy, does not find a need to raise the interest rates, there is a situation of conflict emerging. So you have to then deal with market volatility, and there will be a lot of compliance pressure. You see, digital transformation, IT will lead to better products, but the domestic banks may face struggles in trying to cope with the change the change in the norms, the change in their own productivity norms, there will be a culture shift. And then, of course, we are talking about financial inclusion. So, what happens to the poorer segment? I mean, India is a huge, very, very attractive market. But even in microfinance, we have caps on interest rates, on priority lending also. While we don't have caps, we still don't want very high interest rates.
Right.
So then it will be a problem. And that we will have to cope with as we go along. But right now, the low-hanging fruit is very attractive because if we get a lot of money in, we have leverage.
How important is that? How important is that? That's indeed something. Yes, at this time, we're talking about. Yes.
Because, you upscale, you get the best practices, best-in-class practices from across the world. And you don't have to worry about the money.
But don't we already have that in private banks?
No, we don't have it to the extent that the world has it. We have the best payment systems in the world, but it's something which is ongoing, which gets, there is a lot of obsolescence in digital infrastructure. So the money is something which is welcome, but it comes with strings attached.
Right.
So the thing is to understand the strings, understand the risks, and then go forward positively to manage those risks. And also, you see.
Yes.
Yeah,
yes, I will come back to you, Dr. Pan Joshi. Mr. Purvar is also waiting to speak to us, the former chairman of SBI. Mr. Purvar, great to have you with us as well. Perhaps you heard what Dr. Pan Joshi had to say. In terms of the need for recapitalization of public sector banks, how crucial is it, sir, in your opinion? We seem to have lost connection over there, but that is the exact point that we are looking at. Today, Karan Gupta, PSU bank stocks have reacted positively to the news. How do you see the markets reacting if this policy actually comes through? Are you seeing PSU bank stocks getting re-rated upwards? Because you're talking about a positive sentiment building over here. You're talking about a government that is going to reduce its stake in public sector banks. Is that going to be seen by the markets as such? And is there a re-rating on the cards if that actually goes through?
While I'm no market expert as such on the equity side, but over the years, the kind of performance that public sector banks have put up, and with this measure of allowing more foreign participation for the banks, this would be a welcome step, for the banks going ahead.
So you think this is going to be a positive step in general? And today, of course, we've seen these banks move up in terms of the market reaction. But going ahead from here, Mr. Venkatachalam, you think this shift could impact lending to small businesses and farmers, which is also primarily the kind of business model that PSU banks have had? Or do you think this is dynamically going to change? If you were to look at it more objectively, Mr. Venkatachalam, do you think that entire business model is likely to change with infusion of foreign capital in public sector banks?
Yeah, you are right. That's definitely going to change because foreign banks and foreign capital, their requirement will be different. They'll be on corporate lending or maybe middle-class retail lending. But public sector bank, main thing is focus is agriculture, employment generation, poverty reduction, social lending, infrastructure. So this will not be their priority. So there'll be clash. And that too, if 49% capital will come with more voting right, they will be in the board also. So there'll be clash of interest. It is absolutely undesirable, not advisable at all. The lending will change, not for the better, but to the detriment of Indian requirement. We need further penetration into the rural market and also to develop our economy on a sustainable basis. So that will not happen if foreign capital will come. Their requirements is completely different. If they want to bring in capital to India, there are other sector, manufacturing sector, they can bring. Why they want to come to financial sector, that too in public sector banking? It's absolutely ill-advised. I think we should not go for it.
Yes, yes, and you do keep reiterating that point. Mr. Gupta, from, we've seen kind of Emirates NBD as a bank that is looking at an increased exposure to India's financial landscape. We've seen other banks like into Yes Bank as well. So it is coming at a time when there is this increased interest in India's financial landscape for what it could deliver when investments are made, when foreign capital is invested in the banking sector. In that light, is this that momentum that the government is trying to kind of ride on, that crest? They want to be able to use this time and opportunity that others are seeing in the banking sector. Do you think that's the key driver? Where exactly is this interest that the government has in drawing in more investments from foreign capital into public sector banks coming from?
So I think the objective is twofold. One is, the government has always said that they would like to create stronger financial institutions and few stronger banks in India going ahead. And in that light, they've been trying to bring down the stake in various public sector banks to 75% already. Now, with that as the background, if this was to be done at a time when the public sector banks have shown a big turnaround in terms of financial performance, then, with the interest that globally is emanating for the banking sector in India, given that it's going to be a growth market, the timing could be, well in line with that.
If the government stake drops over time, do you think PSU banks are going to lose their sovereign comfort that they've enjoyed for a very long time? Do you think that's likely to happen, and then they could face rating downgrades as well?
From a rating approach perspective for public sector banks, the way we look at it, it is a systemic importance driven approach, where amongst various factors, which includes the likes of their market share of advances, market share of deposits, their market share in terms of the branch network that they have, or the kind of SLBCs that they had, one of the factors is government ownership level. So if by itself that was to drop, but the government of India still remains the dominant shareholder, then we do not see a big change to the ratings as such.
In that sense, how do private banks really compare when it comes to the ratings picture? The scenario that we have right now, private banks vis-a-vis public sector banks. What's the status, and how is that likely to change if fresh capital, foreign capital, comes into public sector banks?
Currently, as we speak, most of the private sector banks would be driven by a standalone approach, which means it is largely to do with the kind of franchise that they have, the kind of financial performance that they report on an ongoing basis, and versus what I have already mentioned for the public sector banks, where it's a systemic importance driven approach. Going ahead, with an expected decline in the government ownership and foreign ownership increasing, but if the government still remains the dominant shareholder, the systemic importance framework would not change with just change in one factor.
But Mr. Venkatachalam, the other important aspect to consider over here, besides the ratings picture, is the talent gap. When it comes to the banking sector, where is that currently poised? Because if this does happen, is there a shift that you're expecting in talent and how it moves between private and public sector banks?
See, as of now, especially in the new generation private banks, the whole, the people have gone from public sector banks only. So it is not that they are special experts. All that they have taken are only from our banks only. Our own people have gone there. So I don't think that their private bank people are much expertise having all these things, and public sector banks do not do well there. And see, Mr. Purwar is here in that. He has been heading one of the biggest bank in the world. So he has done it very well there. So I don't think it is a big issue. And in fact, if they will come with some other orientation if they come from outside. Otherwise, our public sector bank staff, officers, manager, executives, they are well equipped to run the bank properly. I don't think this is going to solve that problem. In fact, we are only supplying people to private banks. So that's not a big issue.
Mr. Gupta, what do you say about, because SBI has come up time and again as a good example, a strong example of how PSU banks can do well, perform well, and have a global presence. When you talk about the pecking order for the public sector banks that might draw interest from foreign capital at this stage, how does that pecking order look? How attractive are they at this stage? What would someone sitting outside of India consider when they have to park money in a public sector bank in India today?
So, you're absolutely right. In that sense, SBI leads the way in terms of, how things should be done. And there are more banks which follow through. If you look at a Bank of Baroda as well, that's another very efficiently run bank. And then there are a host of others. All of those would be in contention from a foreign ownership perspective going ahead.
Well, this is a big reform push in the Indian banking sector. Reforms have been at the heart of it, and now foreign capital could bring in new energy, a discipline as well. It could make us globally competitive, but it's only meaningful if it comes with genuine freedom. It comes with accountability as well. I want to thank all our guests for joining us. Of course, Mr. Purva, Dr. Dipali Pant Joshi, and of course, Mr. Venkatachalam, Mr. Karan Gupta. Thank you very much for joining us on this edition of The Big Question. Always a pleasure having you with us. And there you have it, viewers. Of course, it's a starting stage. We will have to see how the government moves ahead. It is still information that we are digesting. And here we are decoding what the possible outcome of it can be. But since we are talking about reforms, one can expect it to bring about change in our banking system, how globally competitive we are in times to come. I'm Vikram Oza from me and the entire team. Thank you for joining us on The Big Question on NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank.
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, let's just see how the markets have fared today first. Nifty ended a choppy day of trade above 25,900 levels. Sensex also managed to recover after declining over 500 points at one point during the day. It shut shop down about 80 points. Let's look at the sector. So most sectors have ended the day in the red, with realty and IT leading losses. FMCG and defense were also on the back foot. PSU banks and metals remained resilient in trade today. Let's now look at some key earnings. Chemical major Jubilant Ingrevia has reported a strong performance for the second quarter. Now, this is driven primarily by its high-growth specialty chemical segment. Now, on a consolidated year-on-year basis, the company has posted a solid 7.2% jump in the revenue to 1,121 crore rupees, with net profit showing an impressive 17.7% growth to nearly 70 crore rupees. EBITDA has also increased by nearly 9%, with margins holding steady at 12.1%. So management commentary was strong, highlighting that the specialty chemicals portfolio continues to be, the key growth driver there. So the company further emphasized its long-term growth by targeting a peak annual revenue of 1,200 crore rupees from a new large-scale CDMO contract, while reiterating its ambitious, FY30 EBITDA guidance of 2,000 crore rupees. Next up, we have JK Tyre and Industries, which has reported a strong second quarter performance, with its consolidated net profit surging by approximately 64%, and this is driven by a significant recovery in the operating margins. So on a year-on-year basis, the company has seen its net profit jump 64% to 221 crore rupees compared to 135 crore rupees in the previous quarter, in the last year for the same quarter. So revenue also grew by 10.8%, which is nearly 11% to 4,011 crore rupees against 3,622 crore rupees previously. So the management maintains a positive outlook and also expecting a continued rise in demand, particularly from the original equipment manufacturer segment. Keeping the earnings momentum on, automotive component major Sona BLW Precision Forgings is driving ahead with a strong Q2 performance, with quarterly sales hitting an all-time high. So the company's top line has gotten a significant boost from better than expected automotive product sales. Sona BLW's order book remains robust, currently valued at massive 23,600 crore rupees, which includes 1,000 crore rupees worth of new orders bagged during the quarter. So significantly, the future forward focus is clear. Revenue share from the battery electric vehicle segment, or the BEVs, stood strong at 32%. Next up, we have Car Trade Tech, which has posted a strong Q2 performance, with numbers handily beating the analyst estimates. The company's consolidated revenue for the quarter stood at 193 crore rupees. This is marking a 25.4% increase year on year compared to 154 crore rupees in the same period last year. So margins have expanded to 32.9%, which is nearly 33% versus 21.2%, while the net profit also more than doubled to 60 crore rupees. Moving on to a strong earnings report from the defense sector, as Mascon Dock Shipbuilders have posted a robust set of numbers for the second quarter, demonstrating a sharp recovery in the profitability. So here are the highlights there. The defense PSU has seen its margin bounce back, with the EBITDA margin expanding significantly to 23.7% as compared to $18.5 year-on-year basis. But the jump was actually fueled by higher other income and also lower material cost, and it signals that the impact of one-time provisions from the earlier quarter has started tampering off. So on the growth front, Mascon Dock's net profit has surged by a significant 28% year-on-year, and this is clocking in at 749 crore rupees. Operational performance was also strong. So revenue has grown 6.3% there, while EBITDA has jumped 36%. Now moving to the telecom infrastructure space, Indus Towers has reported an inline set of earnings for the second quarter, primarily on the back of financial adjustments and also steady operational expansion. The company's adjusted EBITDA came in at 4,377 crore rupees. This is marking a 2.7% sequential growth. However, this number includes an adjustment from a provision reversal of 190 crore rupees related to doubtful debts, which has aided the profitability. Now on the operational front, tower and tenancy net additions were actually flat, quarter-on-quarter basis as growth, remain constrained by the lack of fresh rollout from the Vodafone Idea. Sami Hotels makes its debut in the Mumbai metropolitan region with a massive new project in Navi Mumbai. So the company gets MIDC approval to extend the timeline for its 700-room hotel featuring Westin and Fairfield by Marriott. So located near Navi Mumbai Airport and DY Patil Stadium, it becomes Sami's largest property yet. Next up, we have Tata Chemicals, which has scored a legal win in Kenya. So its subsidiary wins a 783 crore rupees land revenue case with the Court of Appeal in Nairobi ruling in favor of the company. So the court finds that the county government's demand arbitrary and also illegal, stating that Tata Chemicals is not obliged to pay the arrears without a clear and accountable framework. Next up, we have Everest Industries, which has received a key clearance for its land sale at Podanur. Now, the Ministry of Environment, Forest and Climate Change grants an amendment in the approval. The deal is worth 133.86 crore rupees payable in tranches. The company has already received 7 crore as the first tranche and is now set to get the second one. Hindustan Zinc, viewers, has trimmed its silver production guidance after Q2. So the company now expects output at 680 metric tons. Silver prices have tumbled 3.7% yesterday after plunging 8.7% in a single day last week. So this is the steepest drop since February 2021. Next up, we have Bata India, which has reported a soft second quarter. Revenue takes a hit from the GST reforms, while earnings are weighed down by the inventory clearance and also higher marketing spends there. Margins have narrowed, and also the company, is booking an exceptional loss linked to a voluntary retirement scheme at one of its factories there. Raymond has posted a mixed bag in Q2. Revenue sees a boost driven by strong performance in the aerospace and defense segment. Better product mix and also higher volumes left the margins in that business. However, the tools and hardware division faces pressure in export markets. Overall, the margins remain